Sunday night charts and Jim of all trades. Good to see you guys. Welcome to the live stream. Let me just what's going on, guys? Welcome myself on the screen here. Welcome Sunday night charts. Screen. There we go. Boom. There I am. Live stream on all of my glory. Good to see you guys. Welcome. Let's make sure there's good audio video. We'll get right into it, guys. What's up, Hugo? Glory. How y'all doing? Just to see you guys. Well present. Let's make sure there's good audio video. We'll get right into it. Farrah Hills. What's up, see you guys? Glory. How y'all doing? All right, guys. We're going to jump into Bitcoin tonight. Look at Bitcoin and Ethereum and ADA. We're going to just look at the entire crypto market as a whole, see what she's doing. Look at Bitcoin wave structure standpoint. Look at the SPX. We're going to look at the NASDAQ. We'll look at the DXY. Wave structure standpoint. LTC maybe too. Of course, that's part of crypto. We just kind of get a flavor for whatever the market's doing, guys. We'll look and see. I'm thinking to the upside. So my title says so. I think we're about to resume the upward trend. I'll talk to you about what I'm thinking and what I'm seeing the upside on the chart, and you guys can so. I think we're about to resume the upward trend. Looking decent for the upside from a wave structure standpoint. For me, it just depends on what the market wants to do in the next week or so. So don't forget to hit those likes and subscribe and all that jazz. I got my coffee, my cold iced coffee ready rocking. And hit those likes and subscribe and all that jazz. I got stay my cold iced coffee ready rocking. And hit those likes and subscribe and all that jazz. I got stay high. Hit those likes and subscribe and all that jazz. I got stay high. Hydrated and stay awake. I'm tired tonight, guys. I may only have an hour in me tonight. We'll see how the night progresses, but good to see you guys and welcome. All right, good audio and video. Audio and video is good. Seth says thank you so much. Appreciate it. Hey, Eddie Bo, man, how's life down there in your neck of the woods? Hope you're doing well. I haven't talked to you in quite a while. Jim's gonna give it to you. Whatever. All right, guys. Let's start with Bitcoin analysis here, and I'll show you what I'm seeing here. This is the 2-day chart we're sitting on right now. Let's get on the daily. We can begin to understand what we're seeing here. So on the daily chart, guys, we've got first off, let's analyze what this structure was, and how to look at that. And just figure it out. Now, I am an Elliott Wave trader, guys. Just what that means is I look at the market through an Elliott Wave theory lens. Okay, we look at the market through 5s and 3s. We put those structures together and predict where price is going based on those structures. We give scenarios to be watching out for, but we don't know where price is going. We wouldn't ever predict that. Would never say we know where price is going, but we'll give some predictions on where price could go. And how the wave shapes might work. So it's always up or down. But I'm here to tell you, I think it's up, and I've been bullish for a while. But it needs to get bullish. If it's gonna be bullish, it needs to go up now. So let's look at the chart and see what's going on. Okay, so just looking at the macro. I know the macro needs to come down some more. Okay, the macro needs to come down more. That's my take on that. I don't think we've hit our bottom support. I don't think we've hit where we're going to bottom out. I think there's more. The real support, in my opinion, is anywhere between $3,000 and $6,000. Right in this range, right there is the real price support. So I think the market needs to come down to that range. However, I don't think the market's just going to dive straight down there. Okay. In fact, what I believe is happening is that the market is going to have a rally that's steep and fast. Okay. and if it's going to do it, it needs to do it. It needs to do it this week and next week. It needs to start doing it. But I think we're going to get a rally that's quick and fast and furious, as I often say, and come back and retest this area back up in here. Would not be surprised to see it get to 48K or even take out the liquidity that's sitting above this high right there, which is about 50K, 48, 50K. Would not be surprised to see that, okay? That's what I think is going to happen. What's the Elliott wave structure that supports that? Well, the Elliott wave structure that I see on the chart is this is a W wave right here. We have a 3-wave move down to here, A, B, C, right there. And what's happening right in here is that we have an expanded flat, okay? An expanded flat that needs to get back up here relatively fast and quick. And then let's give a Y wave back down to the support range down here. Okay, so let's give the Y wave down here. Now, in order to get this low, in order to get here on the fibs, the size of the move to the upside needs to go up. I would say it needs to go up to about 45 to 46K. Price really needs to get on up here if we're going to get down here the way I'm thinking about it. Now, the price doesn't have to go the way I'm thinking about, but from the wave structure standpoint, this is my primary idea, that we're getting an A, B, and now C. Excuse me. And we're in the process of 5 waves of C, okay? Now, we're going to talk about what all could be happening right now. We'll talk about this on the small time frames in just a moment, but we're in the middle of a 5-wave C wave up to the upside to finish this thing out, and we needed to get up to about 45, 46K. That would be ideal. That would give us another 3 waves down here to the 786 extension, okay? And no problem getting to about $6,000 or less, okay? Now, if you're okay with a lower target on that 786, if you're okay with like a $3,000 Bitcoin at the low, then price just needs to get up to about 43K, which is more reasonable actually. That is my that's a fib level that I have marked off as the 3618 extension of this move right there. You see it right there, right at 43K. So that's the way I'm thinking about that. So the question is, how are we going to make it up here? What's the wave structure? Well, best I can tell, what we have going on could be potentially could have a 1-2 right here, 1-2. Okay, let's go ahead and just label that 1 and wave 2. Now, what is happening here? Okay, well, this could be a wave 1 up to here with a wave 2 to the downside, right? Which was followed by another impulse wave, could be another 1-2. We could have a nest of 3 1-2s. That's the ultra bull count. That's the moon boy count. That's the count that's going to take us to the upside. How would that play out? Well, it would play out like this: 1, 2, 3, 4, and 5. Okay. Then we'd say 1, 2, all that's 3, 4, and 5. And then you'd say, okay, we got 1, 2, all of this is 3, 4, and 5. And that's how we get on up there. So once we start making our next move to the upside, it starts to get choppy, and it starts to get a bit more choppy and ending the wave, kind of like I've drawn right there. So, but that's a plausible count for a C wave. Gets us up to about 43K, which is, I think, where we need to get. If we're going to get down to about 3K. All right. So there's the that's the bull count. That's what I expect to see. So on the small time frame, then what's going on here? What's happening on the small time frame? Well, best guess I have here that this is a W X Y X Z. That we have a triple correction there. Best I can tell. Because we had a nice WXY down to here. It came back up and then rolled over and came back down. So best I can tell it's a WXYZ. So that's a possibility. Okay. That means I'm looking at this as a 1 and this as a triple correction, wave 2. Now, the invalidation of this count is very simple. If this rolls over and takes this low out right here, the origin of wave 1, then we have a no-go on a 1-2. That's a very simple invalidation. Very easy to tell when this count gets invalid. In other words, if this thing wants to roll over and come down to the next low, then all of a sudden I am not so bullish anymore, because what it does, well, I'm not bullish in the same way anymore, because what it does is it wipes out the nest of 1-2s that I have. It wipes out, it invalidates that count. So if price rolls over, okay, this is very important. Price rolls over and takes this low out. We cannot be bullish in the same way that we were bullish before. We can be bullish, but it has to be in a different way, a different wave count. So for me to be looking for this, that's a 1-2. That gets invalid when this low gets broken. Okay, that's clear. Hey, Big John, good to see you. Okay. All right. So I think that's possible. That's plausible. We could have hit a bottom here. Or are we going to come down and retest the low one more time and then we're going to go up? That's what I've been thinking up to this point, but the wave action today has been crazy. Wave action has been crazy. So Aaron, if you don't think Bitcoin can go to $3,000, you maybe you haven't been in the space long enough. We could totally go to $3,000, no problem. Are we going to go there tomorrow? No. Are we going to roll over? And no, it's not going to happen immediately. In fact, I think we're going to pump up to the 40s and then down. Right? I'm bullish for now. All right. So basically, this count becomes invalid the moment this low gets broken. Okay. So there you go, guys. I'm feeling super lethargic tonight. Not feeling very well. I'm feeling okay, but I'm just feeling really tired. I was out playing baseball with my son today, so I kind of wiped it out of me. All right. So yeah, I think we could come spike to low here. If this comes down and spikes to low, that would be fine. And then comes up, no problem at all. But we needed to. I need this thing to hold this low, okay? And I won't want to see us coming down and retesting it with any kind of. I'd love for it just to be done for now and just to head up now. That would make my day for sure. Well, if you can accept 3,000, you can also accept 1,500, which is another count I have. Takes us to 1,500. The historic chart of Bitcoin. I see what you guys are saying. Sorry, I'm not. I'm just kind of. Maybe I should ignore what you guys are saying, because from a wave structure standpoint, Bitcoin can do something new historically. I mean, the idea that says, "Hey, Bitcoin can never do anything new," is just you know better than that, right? You obviously know better. Of course, we trade probabilities and we trade the wave structure as it's developed, but I see a very strong possibility, strong likelihood of coming down to anywhere from I like the $4,000 better than 3, but it could come down to 3, between 3 and 6K. I really like the 6K area. So. I mean, guys, just getting on the monthly chart here. Here's the deal. Here's what's at stake. Maybe get on the weekly chart just so you can understand where I'm coming from. If this is the top of a 5-wave move, this would have no problem coming down here and retesting these lows, no problem. Definitely like the 4K range. That's real. It's real support right down here. 3,800, 3,900. I like that range. To $6,000. I really like $6,000 a lot. There's a lot of price history around $6,000. I like that $6,000 level. So, yeah, we'd have no problem doing that. And this more than likely would be a wave 1, and this is a wave 2. Okay, I don't buy. I know there are other counts out there. Yeah, I'm not a big macro count guy. I don't buy the macro count out there. So if this is the end of 5 waves, which it totally could be, and this is the correction of those 5 waves, and then we begin something new. Okay. All right, anyway. There's the macro look. There's the macro look. Where I think we are. We're in an ABC right now. That is much like this move right here. Or this move right here. I'll show you this fractal. This is 2019 price action off the bottom. Okay. This is current day price action off the bottom. Okay. You'll notice the fractal play in here, where we've got a nice boom, 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 boom. Let's come up and let's go. So that's a fractal I've been watching. That's a pretty nice little fractal. Whether it plays or not, we'll see. We'll see if that plays. But you got hidden bullish divergence. We got bullish divergence on the 4-hour, no problem. It looks good. I think ultimately Bitcoin's pump in value is going to probably relate directly to the dollar's demise. That the powers that be, are going to kill are going to kill the dollar, and they're going to take us into CBDCs. So, we're really in precarious times here, guys. We really are, and times that, I'll be honest with you, I don't know what's going to happen. I mean, nobody does, but they're scary times, and I just don't think, guys, we should have our head in the sand thinking that Bitcoin is just going to pop up here and just go on, forever, or do what it's always done. We're in a different time period right now, which they are changing our economy, literally changing the very nature of our economy over from a fiat fractional reserve banking system to a digital central bank digital currency system. So yeah. So what's happening here more than likely is they're going to give a final pump to the markets, not just Bitcoin, but also SPX, the NASDAQ. They're going to pump the markets, hit the high again or get close to it, and then sell off. They're going to sell it off like crazy. So they're going to go back up and retest the highs and then sell it off, and they're going to take out the lows. And it's going to instigate a greater crash and a greater feeling of bearishness in the markets. That's going to create panic all over the world. There's going to be a run on the banks. There'll be a run on the banks. And that's when the bail-ins are going to happen, okay? Now remember, we have that footage of the Federal Reserve Bank meeting, the FDIC, the Fed's meeting, the private closed-door meeting, talking about the bail-ins that are coming. Now, if you don't know what a bail-in is, the bailout was in 2008. The government had the Federal Reserve print trillions of dollars to give to the banks to bail them out, so that people that wanted to go get their money out of the bank, they could. They bailed the banks out. So as the banks became insolvent because of the fractional reserve money that they have on hand, the banks got bailed out by the government, basically, with free money, okay, with worthless free money. Now, the next time we have a run on the bank where everybody is, where everybody goes to get their money out, you're not going to be able to get your money out because they're not going to bail out the bank. They're not going to do it. They're going to bail them in. And what that means is that your money that is in there won't be accessible. It will become part of the stock and the liquidity of the bank to do with what they will. They can withhold the bank. All right. They can withhold your money from you and only let you get so much out of it, like they did in Cyprus, in Greece, back in what year was that? Did that happen? But they did that. Was that 2008, 2009 time? I can't remember. But basically, people could only get like $100 a day out, and they still didn't have access to all their money when they wanted it. So in other words, the banks took your money, the bank took their money and took ownership of it to use how they see fit until they were able to, do whatever they could to get through that time. So that's what's going to happen next. That's the next crisis coming down the pipe. Now, what's going to cause the banks, and what's going to be the thing that happens that causes there to be a run on the banks. I don't know what that is. I don't know what that is. But there will be a run on the banks, and the banks are not going. They are going to. They're not going to get bailed out by the government this time. They're going to be bailed in. You're not going to have access to your money with the hyperinflation that we're seeing in the market in the primary markets today, in which everything's costing more. You're going to have increased prices of things, of just the general goods for living. You're going to have decreased access to funds. Everybody's going to be crying out and looking for the government for the solution, whatever happens that causes that run to the bank. They're going to be looking for that, and then what the Federal Reserve is going to say, okay, we have the solution for you. It's their central bank digital currency, and they're going to roll it out, and they're going to start giving free money to everybody in the form of digital currency, and they're going to say, go spend it on what you need, and go make it happen, right? And so that's what's coming down the road, and that's how they're going to more than likely inaugurate the institution, institutionalize her to bring in digital currencies so that everybody accepts it. It'll be the central bank's digital currency that everybody will accept, because they'll be giving it free, just like they did in COVID. Remember, they sent all that money out to you and everybody took the checks and sat at home. Everybody was happy to sit at home and take the free money. And so people are going to do it again. Oh, the government's giving free money out. Okay, so what if it's a digital currency? That's fine. And then they're going to say, basically, your paper money is worthless, or it's going to become worthless, and you're going to have to go exchange it at the bank for a digital version of it. So you'll take all your cash in and you'll turn it in for a digital version of it. And then all of a sudden, before you know it, our world system is switched over to digital currencies, except it's not going to be an exchange of Bitcoin. It's not going to be exchange of Ethereum or exchange of all these other assets you guys are accumulating. It's going to be the exchange of central bank digital currencies. Okay, so what you guys and what we are speculating on is that the value, when the system goes to digital, when the CBDCs are rolled out, the central banks are using their digital dollars. Your hope is that your BTC and your Ethereum doesn't become worthless. That BTC, Ethereum, and these different cryptos all will have a use case on the blockchain in that new economic system. Okay. Well, Aaron, your cash, what you have in the bank is still represented in cash. Your balance, even if you use a debit card, that's like using the cash system. It's still valued in a fiat cash dollar. Okay, that cash dollar is going to go away. All right, and the central bank digital currencies will be rolled out. So you guys have to just understand that, and they're going to use a crisis to do it. That's what you have to. That's also what you have to understand. A crisis is coming, and so the way I see the market setting up for that is that we've had a correction here in the SPX, for instance, which is representative of the U.S. markets. That we've had a downward shift, okay? Yeah, it'll be a swap. Anyway, this is a downward shift in the market, and then you're going to see a move back to the upside. It's going to be a rally. We're already heading in that direction. Price is now trending. We've broken this trend line, okay? We've broken it to the upside. Price is trending back to the upside. Okay, we are currently trending. We've got higher highs and higher lows already set on the higher time frames. Okay. Nathan, ask your question again. I'm not sure. I see this, if we're looking at the SPX, I see this as a leading diag off the top. That's 5 waves, looking for a 3-wave retest of the highs, okay? So I'm looking for a retrace in 3 waves, okay, that's gonna be a form of a rally, and then the crap's gonna hit the fan, and price is gonna start tanking again, and it's gonna come down faster than this went down. It's gonna come down faster, and it's gonna be scary for a lot of people. Okay, now in conjunction with that, Bitcoin is gonna be coming down as well. All right. The NASDAQ will be coming down as well. In fact, all the markets opposite the dollar. No, I do not believe 5 waves down from the high. No, I don't believe that. Definitely not. I do not believe that count in any way, shape, or form. So anyway, that means that Bitcoin is going to hit new lows again. Okay. However, before that happens, I think we're going to see Bitcoin pump, just like the S&P market's going to pump more than likely, as well as the NASDAQ is going to pump more than likely as well. So looking for a pump and then a major market dump, just like we're looking at, in Bitcoin on the high. Looking for this pump and then a major dump follow. Okay, to finish out this correction to the downside. Now I've spent many other live streams explaining my rationale for this wave structure and why I believe this is what's happening. I'm not going to go into that again tonight. I don't know that I have the energy to do it. Okay, but a couple of things just to point out to you, that right here, this low right here, this low was a lower low after 3 waves. We had a 3-wave there, 3-wave there, 3-wave there. Finished. And now we went up. In other words, there's 3. There's 3. Now we're looking for the 5. One could argue, and I think some are arguing, that this is a finished 5 waves. 1, 2, 3, 4, and 5. That's finished. That's a finished move. That's 5 waves. That could be your A, B, and C to here, and it's done. The only problem with that count is that it doesn't make sense on a macro level. On a macro level, okay, this does not have the shape of an impulse wave at all. In no way, shape, or form does it look like an impulse wave. Okay? It resembles in every way, shape, or form like 3 waves. W, X, and a Y. Or you could get 5, 3, 5 out of that. Though it's a challenge, it's easier to see it as 3, 3, 3. Nevertheless, a count like this, saying 1, 2, 3, 4, and then 5, I'm not a fan of that count. This doesn't have the extension we would expect to see. Could that happen? Yes, but the problem with that count is that wave 1 is going to be bigger than wave 3, okay, which is possible as long as wave 3 is not the shortest. That's the only rule there. You also need to get 5 waves out of each of these waves, which is challenging, but you can somehow try to swing it, and you can get it. So it's not so bad. But it just doesn't give me the sense that we're really making that wave structure. My only bear count that I have that has us coming down from here would be a W, X, Y, X, Z. So in other words, that's the only way I see us getting down here. And that means we need to go down in 3 waves. And it needs to be fairly deep, about 1K. If that's a WXYXZ. I'm not a fan of that count. I tend to believe that we're getting a fast and furious wave, a pump back to the upside. It's going to surprise the heck out of everybody. The way, as fast as it's going to be, and the way it's going to take everybody out, it's going to take a lot of liquidity out of the market. Going to mess a lot of people who are short up, who are looking for, who are looking for more down from here, that we got a 5-wave move. I think it's going to mess people up. And I think we're going to go to about 43K, at least. 43K. And my eyes are killing me. Sorry, guys. Struggling tonight. So, yeah. Aaron, about blockchain. No, blockchain's here to stay. Blockchain is here to stay. More than likely. So my main count here, guys, is I want to see this move. I want to see us start working our way up from here. Okay, even if Bitcoin wants to come here and tag the low one more time, all right, fine. Come tag the low one more time, and then go up from there. That's fine. But I do not want to see this low broken. If I do see that low broken, we have to change our tune a bit on how bullish we are. I'm still bullish, but in a different way. So what's the new count if I'm still bullish if that low gets broken? Well, if this low gets broken, then I'm looking at this as my A wave. I need a B wave. Okay, then I'm looking for a C wave to the downside. So then all of a sudden, what I'm looking at is A, B, C. And now I got a 1 wave to here. And this is wave 2. We get 3, 4, 5. And that's how we get this ABC working, like that. So that's the way I'm thinking about Bitcoin right now. Either way, I think we're due for an upward wave here. I believe we're due for an upward wave, even if it's just corrective. So my main 2 counts right now on the small time frame is I'm looking for either a 3-wave pullback and then a continuation down. Okay, or I'm looking for this to keep pumping, keep pumping, keep pumping. All right, let's look at XRP, Ethereum. What crypto games are you talking about, Hugo? Yeah, I don't know a whole lot about that stuff. Let's look at ETH here. My main count for ETH is the same as Bitcoin. I had this as a possibility. It's a bearish possibility here. More bearish, but I was expecting, to be honest with you, ETH to come down and hit the low. I was expecting ETH to come down and hit the low. Still might. I was expecting all of crypto to come down and hit the lows and then reverse and give us a 1-2 over the weekend or something like that tonight, tomorrow. And it still might happen, but it hasn't happened yet. But this looks like a 1-2 right here. One, come on. A 1 and a 2. Ready for this to start working its way up over the next couple weeks. Let's start going. Okay. And then we got a nice A, B, and now we'd be getting a bigger move to the upside. But this hasn't come up and taken liquidity out here, up here. Neither has Bitcoin. I don't see any reason why ETH shouldn't come on up. To get up to this level and just to stall out without taking liquidity out. I think it needs to come up here and grab liquidity, even get it back up into this range. So I'm seeing this as something like this. That'll be a nice looking wave for Ethereum. Then we'll be looking down for another wave. If you want to see the nice three-wave shape, this is the same three waves, guys, that BTC made. That's the same three waves that BTC made. Okay? So if you think it's 5 waves, you have a 3-wave look to it. You don't have a 5-wave look to it. So it makes more sense to interpret what's happened on BTC as 3 waves in the same way that you see the 3 waves here on Ethereum. And then you got a nice impulse wave, boom, boom. WXYXZ, boom. Now let's go. All right, let's go. This is looking good. I do not think this is, Seth, the way this is looking right now, this is looking like it needs to resolve with a big move up to make sense of this wave structure. It needs to resolve with a big move to the upside. I do not think it's going to kind of come up here and then come down and then go. That's going to look too weird on the chart. I think just looking at the wave, I think it makes most sense for this thing to resolve to the upside. This week, guys, I think this week we're going to start to see this thing resolve to the upside. We do have NFP. I think NFP is this week, I believe. So that's a good time to be watching there for sure. But I'm still bullish, but I'm cautious. I don't like the downward counts. I don't think the downward counts make any sense to me. But that doesn't mean it can't go down. It just means that Jim doesn't understand them right yet. And I'll have to, if they go down, I'll have to accept the market as going down. And it is what it is. So I'm okay with that. But basically, my interpretation of what we're seeing is still bullish price action. And I'm going to be bullish until I can't be bullish anymore. Until they take my bullishness out of me by continuing to hit lower lows on the higher time frames and moderate time frames. All right, that's Ethereum. Let's look at XRP. XRP is interesting. Let's just zoom out a little bit. We have a really, really nice, guys, we got a really, really nice fractal working here. Just pay attention to this fractal right here. And look at this fractal right there. It's the same kind of wave action, okay? You had this three-wave move, then it rolled over and came down, worked its way up, boom, okay? Three-wave move, it rolled over, almost the same wave shape. Hit it low again. I got a 1 and a 2 on my hands. Looks about finished. And then this looks like it's about ready to start working its way back to the upside here for a big spike. I see a 80, 90 cents on the table. No problem. No problem here. I think this is very, very possible. Okay. That this works its way on up. Does it have to go up immediately? Does it have to go up this week? Not necessarily, but I think there's a good chance this market's about ready this week to make the move. Hey, what's up? What's up, Ayman? How you doing, buddy? All right, so I like that on the higher time frames. Let's look at the smaller time frames. You know, that count gets invalidated really easily, guys. I mean, super simple. Super simple invalidation. Oh, sorry. We can come lower. That's not a problem. In fact, I probably see this coming lower. Likely down here somewhere to finish a WXYXZ. Okay? Because we're getting complex corrections like everywhere. Crazy. We got a 1, 2, 3, 4, 5. Okay? Got a WXYXZ. All right. And then let's go. Let's see if we get going here after that. So I would love for this to come down and see the low one more time on XRP and then give us a nice reversal out of here. Something like this. That would be awesome. Whether we get that this week or not, I don't know. We do have NFP at the end of the week. So, ADA, same dealio. Struggle with ADA a little bit. What am I struggling with ADA? Well, I mean, I kind of look like ADA, like, you know, I got an A, B, and now there's a C. That could be done. That's a 1, 2, 3, 4, 5, and that's finished. We're not going to go hit the low at all. We're done, and this thing's going to roll on up to the upside. So that's possible. That counts really good. That's as a 1, 2, as long as that low doesn't get hit, and as long as that low doesn't get taken out. So as long as this low holds, that's a good 1, 2 to the upside, maybe, after an ABC right there. So, thanks, Adam. Appreciate it, buddy. So, yeah, I mean, maybe. So the question is this going to roll over and hit the lows again? Or are we going to get some kind of three-wave move to the upside and then come back down again for some kind of ABC? Or was this part of a flat here? And that's possible as well. 1, 2, 3, 4, 5, maybe. And you got an ABC right there. That's a possible flat there. Hard to tell. ADA's tough. But if I just step back and I just look at it, all right? If I just step back and just look at it, the shape of what I got, I have an impulse off the bottom, okay? I've got a retrace to the 50. Could be done. Might not be done, but it could be. It's a very bullish wave, and we could start working our way back to the upside. No problem. That could be a nice 1, 2. No problems. No problems whatsoever. So Looks good. Are we going to get lower low or some more lows? Hard to say. We're going to have to watch carefully during the times when the market's moving. Let's watch and see what's happening. But with that said, that's my best guess for ADA there. Let's look at LTC, just because I've found LTC to be somewhat helpful in watching. 4-hour chart on LTC. Let's see what the 8-hour looks like. Man, the 8-hour kind of says, hey, I want to come down a little lower. So the 8-hour is kind of pointing down to the downside, a little lower. I don't know if that's going to play or not, if they're going to give that more downside. That's possible. You know, if we get that downside in Bitcoin like I was expecting, that downside in XRP, you know, just one more hit to the low, and even that downside in Ethereum that I was looking at, if we get all those hits to the low tonight and into tomorrow, then we'll have a nice reversal off of it tomorrow. I think that's a possibility. Yeah, I was looking at this as an expanded flat, Iman, for sure. Kind of like, you know, an A, B, and C. It's not a great 5-wave count. The 4 overlaps the 5. The 4 overlaps the 1, so I'm not a big fan of the 5-wave count from there. But it could be a WXY even. That's acting like a flat. We've been getting a lot of those lately. We're getting WXYs that act like flats. We're just getting 3 waves instead of 5. So this could be a WX and then a Y that has a little bit more downside to come down and hit. Okay. We do have some trend lines we can pay attention to. We got this trend line right there. Something like that. If you take these wicks out of play there, that's not a bad trend line. If I take the top of these waves right there, that's not a bad trend line to pay attention to either. We got a lot of hits right in here. So that kind of brings this wave down this way, and it possibly makes sense. I kind of feel like we're going to come down tonight. Best I can tell, hit this low quick, hit the low once, and then go on up after that. As long as we don't break this low here, that's just the key, guys. We can't break this low right there. Now, whether we hit that low or not, no, but it's anybody's guess. It's anybody's guess. But anyway, is this finished? It's possible it's finished, but it looks more likely she wants to come down. Now, if she is done, we got a 1-2, 1-2 off the bottom, guys. If she's done, look at this. That's a 1. That's a 2. There's a 1. There's a 2. Here we go. All right, so if we start moving up to the upside, that's a really good 1-2, 1-2 off the bottom, and it means we're probably not going to. Oh, okay, gotcha. I gotcha. Yeah, that was my original count, buddy, on ADA. Yeah, and we have another wave down where you know, I kind of like this wave. Then if this is expanded, then we up and then down again one more time. That's not a bad. That's not a bad count. You go down a little further. Boom, there we go. That's not a bad count. I like that count. We already hit the 1618. If that's an expanded flat, we already hit it. And we found support right here at this wave. I don't know. I kind of like it done. So let's see if LTC is a 1-2, 1-2. That'd be not bad. That wouldn't be bad at all. And then all of a sudden, what you've got is a WXY to there, man. WX and then a Y, something like that. I mean, maybe technically this 4 respected the 1, 1, 2, 3, 4, 5, and that's an ABC. That's possible because it looks like it just barely respected it. I think it did respect it, so it didn't overlap on LTC. So there's a possibility there. Still, any way you look at it, guys, this 4-hour looks like it could keep coming down on LTC. It really does. So I'm wondering if we're going to keep coming down a little bit further on LTC, but I would love for it just to run on up to the upside. Look at this fractal on LTC. It's just absolutely gorgeous. We watched it last week. look at it again this week just to kind of see. So right here, this is off of the COVID lows here, okay? And you see what we did. This is the same fractal as XRP, the same thing I was showing you. Boom, rolled over. Boom, rolled over. Little slightly different, but not that big of a deal. Rolled over. And then up, and then we chop. Up, now we're chopping. Okay, once we're done chopping, here we go. We're going to get ready to start moving again. So is the market poised to go up now, or do we have a little bit more chop to the downside to go? So that's kind of where we are. But the fractal's looking decent. I'm still bullish. Still bullish on these things, guys. Really am. But not forever. I don't think it's going to go up forever. I just think it's going to go up for 3 waves and then come back down. Come back down for another wave. But that is looking decently bullish. Let's just see if it's finished or not. All right, let's look at the Nasdaq NDX here. So the NDX is looking, you know, I got a leading diag potentially here. 1, 2, 3, 4, 5, boom. And now I'm looking for a 3-wave move back to the upside. I got a 3, I got a 3. Looking for 5 waves back to the upside. Don't think it's finished. And we could have a very extended first wave. 1, 2, 3, 4, 5. Get something like that where we get way back up here. And it's really ugly, but it's something that could happen. Retest the highs, and then all of a sudden we get a 5-wave move back down to the downside that just kills everybody for a C wave. Okay? Just kills everybody. So everybody thinks, hey, we've reversed. We're going back up now. All-time highs. Here we go. It's a dead cat bounce. Retest the highs, and then down we go. So watch out for that. Okay. I think to be honest with you, we are correcting a higher time frame large correction. Okay. That I think we've reached a pinnacle here. We're going to come back up, retest, and we're going to come back down. Okay. See this wave right here? That's what we're doing. Okay. We're in the middle of this rebound wave right here. We're just going up, and then we're going to end up coming back down. And you can kind of see where we came back. Came back down to the top. So we're going to come back down to here. Okay. Somewhere down to 4,000 range. Pretty low. It's going to scare everybody on the NASDAQ. But I think this move right here is what we're doing. Okay. And that's the wave I'm looking for Bitcoin. That's the wave. That's the big move I'm expecting. So that's what I'm seeing here, guys. I mean, I think that's what's happening on the charts here. That this is actually broken. This is broken the structure to the upside. Okay, it's broken up to the upside, so that's clear. On the RSI, it's broken the structure to the upside, and that's the weekly chart. Okay, so we're trending up on the weekly here for the NASDAQ. I don't think we're in a downtrend. I don't think we're crashing this week or next week or whatever, or in the next 4 to 8, 9, 10, 12 weeks or however long. I think we're going to be in an uptrend. That doesn't mean we can't have down weeks. It just means that we're going to be in an upward trend on the weekly time frame. Okay, and we're going to be coming down much like we see this wave right here. Okay, that we've got an impulse to the downside now. We're looking for a 3-wave move that retests 60% of it or higher, and then we're going to end up coming back down again to finish. This is going to come down pretty hard. Okay, and then up we go. Okay, that's what I'm looking for. It's where I think we are on the SPX. Okay. Let me get this off. Just kind of get all that crap that I drew off. We go to the weekly time frame. You just kind of see it. All right, let's look at price and the way it moves, okay? So, you know, when you get big moves down, you get rebounds and another one down, okay? We got big moves down, okay? Rebound, another one down. We're getting a rebound now, okay? I don't know how high. It could take the high out. It doesn't have to, but it can. This can come up and take the high and then come on back down again, okay? That's what I think. That's the wave I think we're in right now. We're in an upward trended wave back to the upside for a little while until we hit the low again. Okay. And that's why I think Bitcoin's about to pump, just like I think DXY is about to dump for the same reason. Okay. Yeah, so the ultimate invalidation, chemo, is going to be wave shape. Okay, right now, even if we break beyond these lows here, we still could be in an X wave to the upside, but the wave shape is going to tell everything. Okay, so even if we break down here, and then go back up in 3 waves and come back down in 5, then all of a sudden we've got a 3-wave shape. Okay, and we still have a valid 1-2 on our hands, 3, 4, 5 to the upside. So to be honest with you, if you're going to talk targets of price, one invalidation might be, well, the break, really the break of this low, the break of that low is really the ultimate invalidation. But we could try to come up with a better invalidation with wave structure analysis. In other words, when we start to see wave structure that is pointing to the downside more than it is pointing to the upside, then that's when we embrace, a more bearish look. So if we break this low right here, well, what we know is that we've broken this 1-2. And that can't be a 1-2 anymore to the upside. So that's going to be the very first thing we're going to pay attention to. That if we break that low, then we're not going to be as bullish. We're going to look for a retest. If it goes up, we're going to look for so if this comes down and breaks this low, we'll look for a retest of 3 waves, but we'll look for a continuation down to the downside. So that 5-wave up is a high probability X wave until it comes down in 3 and breaks above the high made around 40K area. Oh, okay. You're talking about... Oh, what would you say another all-time high is coming? You said yes. Right. So yeah, if we get some kind of an impulse, well, shoot, if we get a correction here and then a move up here, if this goes up in 5 waves and then starts coming back down, we'll have to pay attention to how it comes down. Does it come down in 3? Does it come down in 5? How does it start coming down? So yeah, we'll have to get a 3-wave pullback, which may take months to play out, and then another move to the upside. So yeah, that's going to take a while to know. That's going to take a while to know. But I do see us getting up here, this 40K range, in 2 different ways. My favorite way is that we just go up from here. Okay. Something like that. 1, 2. Okay. 1, 2, 3, 4. Like that. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Gets us up here. And that's the way I want to see this wave go up. Second way this can go up, we pull back a little bit, come down again. We got a 1, 2, go 3, 4, 5. And then a break of this low is no good for this upward count. Yeah, right, Chemo. What time frame do you want? Iman. 4 hour? 1 hour? Let me know. I know there's a lag, so let me know. Let me look at XLM while you're writing your question. All right. XLM. XLM is ugly as crap, this wave is. But I like that as 5 waves. I like this as maybe a 3-wave move. It's really ugly. I'd like to see XLM make a move soon to the upside. But it looks like it needs a little bit more downside to go. Let's see. From the impulse down, I see that there's a fractal as a correction. It looks exactly like the one we're in right now. Let's see. From the impulse down, what? Not 14 hour. 4 hour. Okay. Which impulse down are you talking about? Fractal as a correction. Show me. You can also send me your chart, man. If you got a place where you can send me a link to your Telegram chart, I'll pull it up, check it out. If you want to show me. While I'm waiting on you, I've already done NDX, SPX, so I've kind of explained, guys, where I am. I'm expecting a move up and then down. I haven't looked at the DXY. Let me look at DXY. So DXY, what you noticed here is that we have broken to the downside. We broke back up and retested, and now we're continuing back down to the downside here. We've broken. Okay, this is broken, retested, and come down. I don't like the wave shape. It's nasty and trash. But I'm seeing the DXY like this. Some 1 2 like that. 3 4. Now I'm looking for a pretty steep down move on the DXY. I think the DXY is going to start dumping again. And then yeah, that's okay, buddy. That's all right. Well, this is my favorite fractal of what's happening from 2019. So I mean, the way it looks is just amazing. The fractal. In fact, if you leave out, if you put the two here, it's almost identical. You got this 1 2 3 4 5, and then this kind of straight down move. It's almost an identical thing going on here, guys. You guys see it? You got this chop, chop, chop. Came down almost the same way. And then we're just getting all the same kind of wave structure here. So I'm expecting this to move to the upside eventually. And then and continue up. I'm looking for up this week. I am. Yeah, I'd love to see your chart, buddy. You might be behind in the live too, Adam. If you fast forward to make sure you're live, then you might be behind in the live. Yeah, if Seth, I just read your comment there. If you simply just look at the way the other waves have moved, like right here, like right, come on DXY, it's like right there, for instance, like right here. Yeah, I suppose actually you're right. We could kind of come down, then come back up, and then come on down fast. That might be the case. What that means for BTC, I'm not so sure. Oh yeah, fractal analysis is just good as far as it goes, but it's interesting nonetheless. How strangely, eerily similar this pattern is. I mean, what's happening, everything in this wave is just, it's beautiful. And so I'm actually really wondering if we're going to get that downward hit or not. Starting to doubt it, but we'll see. It hit one time quick and then go. Let's look at Doge for my buddy Merle, and sometimes it takes a little while to get started. Anti-BK takes just a little takes a little time. So and markets move with the timing of banks as well. So, we'll see something maybe tomorrow or Tuesday start to happen. I just keep that in mind. Once it starts once it starts its wave to the upside and gets out of this slow range, for instance, this was kind of a little slow, methodical range here, this little 1-2 here. But once we got there, she started moving. Then she played around for a while, days in here, and then she kept going. So, you know, you just got to keep in mind that these little things on the chart, these things take days to play out on this time frame, you know, a day or two even. That's 4-hour charts here. So just keep that in mind. Things take time. You got to be patient. Okay. But let me look at Doge for chemo, not for chemo, but for Merle. And then I think I'm going to call it a night. Doge. Huh. There's no wave structure here, but that makes any sense to me at all, really. But looking at this wave right here, once it found this low, she went up, pulled back in 3. But I mean, so this may be ready to start rocking. It might be a 1-2. This might be ready to start rocking to the upside. Yeah, I think if we get the rally I'm talking about, people are going to be surprised by it for sure. So, well, guys, I love you. Thanks for being on the channel tonight. I'm kind of giving you my perspective. You know, it's up or down as always. I don't know where it's going to go, but it's kind of what the charts are pointing to me. You know, the invalidations, we talked about those, and let's just see what happens, guys. Let's see how the next couple of days start to play out. Make sure you have your stops in place. And but to me, this was a good area to buy some spot long. I did buy some in here. And what's up, altcoin bonanza? Now there's a guy right there who was my first ever Patreon supporter. Right there, everybody. Altcoin bonanza, the first guy to ever support me through Patreon. And he was the first guy in my Telegram group. How you doing, man? Good to see you. Yeah, Young Song, let me know what I can hang around for a couple minutes. Did you know that? You remember that, don't you? You were my first supporter. Something like 20 or 40 bucks. I think it was like 20 bucks a month or 40 bucks a month, man, at the beginning. You're the man, dude. I think yeah, he literally, I mean, the first dude ever to send me money. That's funny, man. Are you still doing your videos on your own channel of the little S coins that you were shilling at the time? That's funny. Young Song, let me know what you need, buddy. I'm awaiting your question. I'm waiting on Young Song. Shoot me a email at jimofalltrades7@gmail.com, man, and I'll get you in my Discord. Yeah, you just need to post a link. You get a TradingView link, and you post the last portion of the link after the word X or the word it'll be like tradingview.com/X/ and then a bunch of letters, or it'll be /chart/ and a bunch of letters. Just give me that last portion and I'll pull it up. No, definitely not a 1-2-1-2 from 69K. I don't think that. Altcoin Bonanza. I'm looking for personally a macro pump to about 43 to 48K, possibly, and then a dump down to $3,000 over the next year. So I think we're in the middle of a pump up to about 40, maybe even 50K, and then 43K is a nice target, and then but yeah, and then after that, basically my count is like this: it's a W. Let's get an X and then a Y. This is my primary idea. And that'll give the world time to fall apart. And we bottom somewhere in 2024 or so. And then maybe we start rallying back in 2025, 2026. So that's my main take here. So if you start seeing bullishness back up to here, then we'll look down again. Probably not going up for new all-time highs. Everybody's gonna think that. Everybody's gonna think we're going up for all-time highs, but I don't think we're gonna be going to all-time highs. But we'll reevaluate the wave as it's going up. So just stay tuned, check in every week. Send me an email. Like I said, I'll get you in my my Discord, buddy. So anyway. Yeah, Seth. If not Seth, but Young Song. If this is a 1-2, oh crap! I mean, we're going to -70K. It's just that there's just no way that's a 1-2-1-2 to the downside. So yeah. All right, guys. You guys know what I'm looking for. You know what I'm waiting to see. On the micro, let's just mess with the micro just for a minute here, because the market's been doing. There's been real trashy movement in here. Best I can tell here, guys. Best I can tell is that we've got some kind of an A, B, C, or WXY there. Now we got a 1-2. So I think this is going to work its way down like this. And then reverse. So I think we're going to kind of come down, hit the lows tonight, and then rock on to the upside. That's my take. I'm kind of bearish tonight into tomorrow, you know, and then probably up after that. So let's see how tonight, tomorrow do, and what happens in London and New York tomorrow morning, and then we'll go from there, guys. All right. If you're not part of the Discord, invite you in. Come on in. Doesn't matter what time of the month you subscribe to Patreon, you'll get you in there. And it doesn't matter. It used to be that you had to come in on the first of the month, kind of sort of, to get your money's worth on that month. But now they just bill you monthly whenever you join. So Patreon does all that stuff. I don't do it. So go to patreon.com/JimOfAllTrades. My link is in the description. Glad you guys stopped by. Really good to see you, buddy. Altcoin Bonanza. Yeah, I'm not. Sorry, Young Song. I'm definitely not seeing any kind of impulse wave off of the top of 69K for sure. So I see that correctively. Look at Ethereum. Ethereum basically gives it to you. You've just got, it's very clear. It's a 3-wave shape. Boom, you're done. We're looking for 3 waves back up and then 3 waves down again, more than likely. Okay, so Ethereum gives you the shape right there. It's clear as day. So that's what's going on with Bitcoin as well. Hope that helps you. All right. All right, guys. Well, have a great night. S Joe Coco. I don't know how to answer that question. It's a good question. I'm not exactly sure how to answer that, my man. All right, guys. Love y'all. We'll see you. Thanks for stopping by. Bye-bye.
What's going on, my beautiful people from YouTube? Let's talk about the next proof of work altcoin that's going to make us all a whole bunch of money. Just kidding. It already made us a lot of money, actually. So if you guys do get on the Discord and we get to talk to me outside of the YouTube, I already told you about this. You know what's going on here. And it's just me fulfilling a promise to tell everybody else about what's going on, because this is the moonshot that a lot of people have been waiting for. We're putting GPUs back to work, making sure that we are getting returns on the tech that we already have. It is a great time to be in crypto. I don't care what anybody says about this bear market. Yes, the market could be bearish, Bitcoin could be dropping, but there are things that are taken up and taken off, just like Nexa. They are a proof of work blockchain that's doing things really different from other people, but bringing it back to the basics, which is kind of really cool. Giveaway happening. Yes, I'll do it after credits, but you make sure you leave that like and a comment down below, because that's how we make sure that more people get exposed to these videos. Here's their website, and Nexa is a digital economy with a capacity for all. Let me zoom in so you can read this. Nexa is the most scalable blockchain ever built. It will handle over 100 billion transactions per day while offering EVM-like smart contracts and native token services, all while staying decentralized. It's actually some really cool tech that these guys are building, and I got to give them credit for the way they're going about doing this, because they're not trying to raise money from VCs. They're trying to just make this happen the right way. And I know what's the right way. It's hard for any one person to kind of pinpoint that. So going back to their website here, I want to highlight a couple little things that I think is really important. First and foremost, let's talk about Bitcoin Unlimited, because that's who's building this thing. So Nexa has been built and continues to be maintained and upgraded by Bitcoin Unlimited, a 7. Yeah, like this to me is a huge selling point of these guys. They're like an organization that has been around for 7 years and over 70 years of building experience, you know, as far as crypto is concerned. They are, you know, they've worked on Bitcoin, they've worked on Bitcoin Cash, they know what they're doing. And as always, you can always go to their, team page and see everybody that's on there, who's doing what, who's working on this project. They have good people. And that's like the bare minimum for a project to be worthwhile in my book. You know that for a fact. But they take it to the next level by being a proof of work network. That's the safest way to make sure something is safe, is to make it proof of work, especially when proof of stake is in jeopardy. When people are doing that third-party proof of staking type of thing, it's never fun. But get paid directly from the protocol and help secure Nexa. They're encouraging people to mine right now. You can mine with a CPU, not a CPU. They used to be able to mine with the CPU. Now you got to mine with the GPU. That kind of sunsetted back in November of 2022 as far as CPUs are concerned. Kind of like Bitcoin. I remember when I used to mine Bitcoin with my CPU. Oh, the good old days, the good old days. But right now we're in the GPU phase, and it is actually really profitable, especially if you have a 4090. I got to get myself one of those. It's just efficient to mine with that GPU right now. I have a 3090, and I am being, it's the best way for me to mine. And I'm actually going to do a full-out video on how to mine, not only mine Nexa, but dual mine. That way you can increase your profits by over 20% if you do dual mining with your GPUs. And I do it on my main computer. If I'm not utilizing, the power of my GPU, there's no reason for me not to mine. Again, I am in an area where I pay a lot for my electricity, but I produce enough of solar to where I can, still mine without incurring a bill. So I want to get to that next level of, income without having to spend more money. And to me, a GPU is what makes sense. If I were to install a second ASIC miner, well, ASIC miners, you're talking about 3,000 plus watts with one of those units. I'm not going to do that to myself. Instead, I'm going to spend 300 watts and mine with my GPU, Nexa, and Zill at the same time. That's what I'm doing. That's how I'm trying to maximize my profits. I've definitely paid that part, once, maybe twice over already, by mining with it. And to me, it's a no-brainer, because if I have hardware sitting idle, I need to find a way to put it to work. But back to what's important, because how do you get Nexa? What's going on with this thing? And why does it matter? Well, they are really community driven, which is actually super cool, which is why I get a ton of messages talking to me about Nexa, this, Nexa that. And it's worthwhile because these guys are really funding things. They are, not only being the backbone, but they're behind the push for this token. And right now, if you want to get it, there's only a handful of places, but one that I'm really excited about, and I want to let you guys know, XC. Guys, it's launching on March 7th. That's, less than 2 days away. So 48-hour countdown is already rolling. I want to make sure you guys know about this. Here's my referral code for, MEXC, just MEXC.action.ceo. It makes it super easy to get on there, but it's going to be on that, platform. And I love the platform. I can tell you a lot of people with a lot of money use that platform over and over and over again, especially with Celsius. But take a look at, Nexa's market cap and everything that's going on with it right now. Where, like I said, bear market, and right now it is a 8.68. What's going on, my beautiful people from YouTube? Let's talk about the next proof of work altcoin that's going
So the last time I looked at AVAX, I was looking at this break-in market structure here, where we, I'd put in this higher high, higher low, higher high, and then we had broken that last higher low. And, at that time we were up here potentially putting in a lower high to begin a downtrend on this 12-hour structure. And since then we have come down and lost the point of control of this range. And we are actually approaching this key level that I was looking at, the golden pocket and the value area low, also a very key support resistance flip, which it's very interesting how quickly we're approaching this. I was kind of speculating that since that level had so many similarities to the key levels inside of Bitcoin's larger range, basically I was targeting the golden pocket confluence with the value area low on Bitcoin as well, and with some other altcoins. There's a lot of similarities. Pretty much they all have this area of inefficient price action. and a key support resistance flip around the value area low and golden pocket. But AVAX is approaching that level a lot quicker than Bitcoin is. And I mean, you can see that Bitcoin right now is only down about 11%, maybe 12% from its highs. And in order to get to that, key area, it'd be about a 25% drop from those highs. And AVAX has pretty much already gotten that 25% drop from those highs. Now, AVAX is in a slightly different position than Bitcoin because AVAX has broken this 12-hour market structure. It is, technically in a downtrend right now, but Bitcoin did not. We are still in an uptrend here until we break these last significant lows. We are still technically in an uptrend here, and we have the potential to put in a higher low somewhere and maybe then, a higher high. So since AVAX is so close to this key level, given the circumstances and where Bitcoin is at as well, there are a few scenarios I'm looking at. And number one would be that we, see a move down to this key level. We retest this value area low, key support resistance flip where we had, very nice wicks off this level previously. And that would be, about a 10% move to the downside from current prices. And maybe Bitcoin can see a move to the downside and maybe still put in a higher low, or maybe we come down and SFP these lows, which you could say if we SFP these lows, we would then be targeting these highs. That's the way some people look at it. And since AVAX has been moving faster than Bitcoin, at least percentage-wise, it's had a 25% drop, whereas Bitcoin only had like a 12% drop. Maybe if AVAX drops like 10% and Bitcoin only drops like 5%, we may see these two instances line up at the same time, where Bitcoin either comes down to this key level or to some of these wicks for potential swing failure patterns as AVAX is approaching that value area low. And then if Bitcoin starts bouncing from there, we may see AVAX get a significant bounce off that level. But really it does depend on what Bitcoin is doing. If Bitcoin is going to lose that low and we're going to start a downtrend for Bitcoin, then I think it's very likely we will lose this value area low and then, at some point probably come down and take out the lows, potentially go on to put in lower lows. Maybe we SFP the lows, maybe we see another large drop here. But I have been saying that I think it is very likely that Bitcoin does end up going for the highs again before we start this retracement. At least that's what I was thinking before we got this dump on Thursday or whatever day it was. I don't even remember. I was looking at us maybe coming back up into this range and going for the highs, but then Asia absolutely dumped us down on Thursday. And since then, we've really been doing nothing for Bitcoin. We've just been ranging down here. So it's hard to say what's going to happen with Bitcoin, but I would find it very interesting if we could get a move down to this key area for AVAX and maybe see Bitcoin put in a higher low, maybe start to look a little bullish. That could make for a decent trade here on AVAX. I like the golden pocket here, but I really would like to see a test off this value area low, just considering the near perfect taps of support and resistance we've had on this level. And overall for AVAX, that value area low is very key. We do have that 786 and previous range point of control below there, but I have a feeling that if we're going to lose this value area low and make our way back into this range that we traded in down here, there's a good chance that we may end up coming down for the lows. This was like a nice deviation of the range. We got back into it. So, if you're bullish on AVAX, you would really like to see it hold this value area low. Not saying that we can't lose it, bounce off this level, and then come back in the range, but it would look a lot nicer if we held this value area low as support now. And yeah, if Bitcoin is putting in a higher low, if things are looking bullish as we test off this, depending on, your entry and all that, you could get a nice risk reward just targeting the point of control. And then, maybe we could see this thing run. There's still the potential that Bitcoin eventually breaks out of the range to the upside. In that case, alts would be ripping as well. And I mean, we are in a downtrend right now for AVAX. It would be very tough to, look for a break in market structure here because we'd have to come all the way up to this high. But if we start retracing to the upside a little bit, put in another lower high, that could, make it a little bit easier for market structure. Maybe we look to put in a lower high at this point of control, support resistance, flip there, and then, we could look for a break in market structure like that. I'm really just brainstorming here. Mainly, it depends on what Bitcoin is doing. So, I'm looking at this scenario, assuming that Bitcoin is going to be bullish and it's not going to break that last swing low. But if it does, I think it is a completely different story. And, I gotta say, I am a little salty that I did not trust my TA here, that I didn't take this trade off of this NDPOC, because this ended up, being the swing top. This ended up being a great move here. So, for those people that did short this NDPOC, congratulations on that. I was personally looking for an SFP into that golden pocket, but, I ended up missing the train on that one. But now I got alerts set down below, so if we see a move down into this zone, I'll check AVAX, I'll check Bitcoin, and we'll take it from there. Okay, well, thank you guys for watching the video. If you enjoyed, please consider leaving a like and subscribing. Really appreciate the support, and I'll see you all in my next one.
Met these guys from JP Morgan working on a protocol that had pretty crazy promises: 480 transactions per second, or 480,000 transactions per second, a crazy braided chain architecture. And as soon as I sat down at a bar with Will Martino, one of the co-founders, I said, "This is crazy. I'm going to send it to some mathematicians who know better than I do." And they responded that yes, in fact, graph theory is definitely real and could solve a lot of the issues with Bitcoin and with cryptocurrency overall in these layer 1 technologies. So I met the Cadena team way back, and they really interested me to build on their developing ecosystem, which they've recently supercharged with $100 million of available funding to projects and to different people on the space and on the chain. So we said, let's make a really good self-custody application for Cadena, and then let's use all the different benefits of that chain to increase the user's experience of adoption and utility for their assets right in their wallet. Met these guys from JP Morgan working on a protocol that had pretty crazy promises: 480 transactions per second, or 480,000 transactions per second, a crazy braided chain architecture. And as soon as I sat down at a bar with Will Martino, one of the co-founders, I said, "This is crazy. I'm going to send it to some mathematicians who know better than I do." And they responded that yes, in fact, graph theory is definitely real and could solve a lot of the issues with Bitcoin and with cryptocurrency overall in these layer one technologies. So I met the Cadena team way back, and they really interested me to build on their developing ecosystem, which they've recently supercharged with $100 million of available funding to projects and to different people on the space and on the chain. So we said, let's make a really good self-custody application for Cadena, and then let's use all the different benefits of that chain to increase the user's experience of adoption and utility for their assets right in their wallet. Met these guys from JP Morgan working on a protocol that had pretty crazy promises: 480 transactions per second, or 480,000 transactions per
Later on in the video, I'll be talking about the negative divergences on the weekly chart with the money flow and with the RSI, and I'll be talking about the bullish and the bearish scenarios with Bitcoin again, and the divergences. We're going to be addressing the divergences in the daily time frame and the weekly time frame that are now setting up and producing. Now we've had a 13% sell-off from the highs. We'll be talking about all of that. Please support the channel. Make sure you subscribe to the channel so you don't miss any of these important updates. These are the signals that called the top. I called the very day of the top. Back over here, this is a weekly chart. Everybody else was saying we were going to go to 100,000 by October, November, December. I called the November top correctly and the very day of the top because I have very, very good indicators. I look at support and resistance levels. I predicted a crash. The crash has happened. We've dropped 78%. You have people that have been calling a bottom all the way down. Signals got it right. Moon Boys got it wrong. Signals nailed it. We're not out of the woods yet. There's more work to be done for a bottom if we're going to form one here with the higher low, or we're going to get one more dump. I'm going to be talking about all of this. But if you like this kind of information, then please support the channel. I don't have any sponsors. People that recommend you to go to exchanges that are going to go belly up or want to get you loaded up on leverage to wreck you. I'm not interested in doing that. I have no interest in letting anybody try to take advantage or harm my viewers. Not interested in going there. So I have a direct relationship with you. I just ask that you support the channel. And I do that rather than trying to influence you to go to a bunch of places or deal with a bunch of people that want to rip you off. I'm not interested in doing that. So please partner with me and support the channel. That allows me to be able to provide you the information. I'm sharing with you the very indicators that call the top, predicted the crash. These are the signals that I use to make my trading decisions. They've been right. They've been right for years now. And I'm confident they're going to call the bottom, just as they called the top. There's more work to be done in a consolidation, or we're going to new lows. Yeah, I know the Moon Boys are telling us, we're in a new bull market, just like they've been saying all the way down. Look, we're in a new bull market. I'll know it because I have good indicators. So please support the channel with the link directly below to take you to a secured site. You can support the channel with any amount you want. You can make it a recurring donation if you want to, where it comes out every single month. If you do that, I thank you for that. Please partner with me and let me know you want these videos, that you like these videos. I do need your help in order to make this work, because I just put it all out there for free and trust that you'll support what we're trying to do. Just as you trust my indicators, just as you trust my charts, I trust that you'll support what we're trying to do. So please, if you could take just a moment to do that, I would really appreciate it. I encourage you to watch this video all the way through. You're going to hear things you're not going to hear anywhere else. You're going to see things you're not going to see anywhere else. So you might want to take the time to do that. Are we going to just move and get a bloodbath with Bitcoin? Or are we going to get a bounce first? That's what we're going to be talking about in this video. Just to let you know, with the divergence that has played out on Bitcoin, we continue to have our trending candlesticks bearish. We've dropped now 13% from the highs. Critical mass trend timer turned back to bearish on Friday. Again, selling off, forming the diversions. We're going back and forth, red arrow, blue arrow, and then just kind of forming this negative divergence, going from blue arrow back to red arrow, and just going back and forth from green to red bars. This is showing, again, been in a consolidation as we form the negative divergence in a trading range. Either we're going to try to bounce off the trend line right here and form an ascending broadening wedge, or try to bounce and get a back test and a lower high. We're going to just start busting on down through these levels. You bust this trend line, that's going to be very bearish. Critical mass trend timer in the weekly time frame, which has been right for 2 years straight. When Bitcoin goes up, 55% drop, called the very top correctly, red arrows, and then it called the bottom correctly over here, rebound back up to new highs. And then after we peaked, again, it called the top correctly, and red bars all the stinking way down. Look at that. And didn't buy into any of this garbage. Last chance, all the way down. Bottom, bottom, bottom. No, it didn't buy into it. Now we're going sideways in the weekly time frame, and the critical mass trend timer is going from back and forth from red to green, red, green, red, green, going back and forth, just showing we're in a consolidation sideways move. So again, I'll be watching to see if we turn back to red. If we start coming down, do we take out that November low? Again, inverse head and shoulders pattern, or possible tingle that we break down, whichever way we break, down or up. More work to be done. If we're going to break up, we likely are going to get a higher low, establish a higher low for an inverse head and shoulders. Being told is not going to happen. Just like we've sold off 13% from our recent highs. We were told that we were going to have a melt up. That wasn't going to happen. We were told that the previous peak that we were going to have a melt up, and we sold off 12%. We were told that wasn't going to happen. Going sideways. Video all the way through, and you'll see things you're not going to see anywhere else. Friday, Bitcoin got a bearish reversal of conditions. This is Bitcoin futures. Bitcoin got a bearish reversal of conditions. Again, I'll be talking about a possible bounce for a lower high or a higher high if we can remain in positive territory at the awesome oscillator and get another reference point of a divergence or validate a lower high. But this starts going negative. We start seeing the MACD go negative here. You got to get a much bigger drop. And if we take out this trend line right here, again, there's risk of a much bigger drop. So talking about the ascending broadening wedge, I'll be talking about the back test of the rising wedge. I'll be talking about a bounce or a break. Just know that, again, we are now getting a bearish reversal of conditions with Bitcoin here in the daily time frame. So far, the negative divergence that we've talked about at great length and detail has played out. Will we get a bigger dump by taking out the trend line and moving into negative territory with the MACD and the awesome oscillator, or do we buy a little bit more time? I'll be talking about Powell's testimony before Congress this week. Does that buy us a little bit more time with Bitcoin? Maybe. But if we start breaking key support levels, horizontal support here, the trend line here, you start taking out these key support levels, then again, Bitcoin's at risk of a much bigger dump without any kind of rebound at all. And I'll be talking about the possibilities of a rebound, or just, that now that we've taken out the 50 period moving average on the daily chart for Bitcoin, the daily price chart, risk that we remain below it. We'll be addressing all of that. Now, I've been warning you that eventually Bitcoin's going to break down. Now, I told you it could go up to the 400 period moving average and make a slightly higher high, or it could break down and take out the 50. Right now, it's breaking down below the 50. If it gets back above it, watch the 400 period moving average. I'll show you in just a moment. If I bring up the moving averages, you can see that we've lost support of the 10 and 20 period moving average. The 10 period moving average is the red line. The blue is the 20 period simple moving average. We've taken out the green. We lost support of the green, the 50 period moving average, but we're still above the 200 period moving average. So it's what we want to be watching is, again, if we can attempt some kind of rebound back up, or if we go a little bit lower, again, you have the potential you have the potential head and shoulders top. Currently, with the sell-off that we had there on Friday. And right now we're on Sunday's bar here, Saturday evening. The Sunday bar is starting at right now. Currently at the moment, we're up 0.35%. For Saturday's session, we were flat. We were flat getting a doji, and then we got a down day on Friday, which was down 4.73%. Bitcoin dropped on the Silvergate woes there for the Friday session on Thursday evening and being down Friday, taking out that 50-period moving average. So again, I've been warning you, Bitcoin's going to go lower. I told you it may go lower with this divergence. We may get one more push up into the 400-period moving average. That's still possible. Here we have now with coming down, again, if this high holds, which is horizontal resistance, we've talked about it at great length and detail, you go a little bit lower, you've got the possibility of the head and shoulders coming back up to this area here, and then stalling out here at the 24,000 area. Again, the signals correctly predicted we were going to get a drop. We did. We dropped 12%. Okay, and then got a 9-count buy signal, which I'll bring it up and show you right there. And that doji, I told you we were going to get a rebound. What happened? We got a rebound. We gave up 12%. We got it back, and we went just above 24,000, slightly higher to the 25,000 area. I told you that if we try to test the 400 period, we may go to 26 or 27,000, but it's possible the top is in with this divergence. Regardless whether we get one more push higher or if this is a high, look, Bitcoin's going to go lower. Over the next 3 weeks, you've got some interesting things happening. Now, again, the market's trying to rally right now in a counter trend. Bitcoin sold off on the Silvergate fallout. Question is will the market attempt a little bit bigger of a rally? If it does, Bitcoin may, again, attempt a rally back up for a right shoulder or one more push into the highs, but you've broken the trend line now, and you've broken down from a rising wedge with a negative divergence. That might be it. Even if Bitcoin goes to 26 or 27,000 and pushes up to one more high, again, it's going to fail. Did you hear what I just said? It's going to fail. And that's still possible because, again, you have a possible trend line right here. See the slow right here? The slow right here for the 9 count, and this slow right here. You have a possible ascending broadening wedge where you get this 5-point reversal, and you come up here and you get one more push higher. It's like a head and shoulders, okay? But rather than a lower high, the ascending broadening wedge is, you get a 5-point, you get 1, 2, 3, 4, and 5, and then you turn down. That's the reversal point. It's a 5-point reversal, like a head and shoulders. So many technical patterns. But so that's the scenario. That's the scenario that we bounce off this trend line. We get the ascending broadening wedge completing with one more push into the highs, 26, 27,000, into the 400. If you get a trend line here with a slanted neckline and we get a lower high, you get something like this, then again, you still have the head and shoulders pattern in play, the breakdown of the rising wedge, but you get a back test move, a back test of the trend line. Do you see what I'm looking at right here? The back test of the trend line. And then that gives you this lower high, and the rising wedge evolves into a head and shoulders with a slanted neckline, or maybe it's horizontal. Maybe we go down a little bit lower, and then you get this back test. That's assuming that we can attempt to rally. Now, over the next 3 weeks, you've got a boatload of things happening. This next week here that we're now in, we're starting it here. As we move into this next week of trading here, Powell is going to be testifying before Congress on Tuesday and Wednesday, 10 o'clock Eastern. First before the Senate and then before the House. Now, if the market continues to shrug off hawkish statements from Powell, which again, he's made hawkish statements, the market cherry picks what it wants to hear, and Powell says disinflation and they go bonkers. He talks about raising rates. He talks about possibly having to do more if the inflation reports and jobs reports come in. The inflation reports come in hotter. The jobs report come in stronger. The Fed is going to have to get more aggressive. And he talked about that, but the market ignores it. Okay, and he did that with the Q&A back on February 7th. He maintained the hawkish talking points. They maintained the hawkish language in the Fed statement. But these, people in the stock market with Bitcoin, they continue to ignore it. Okay, and now we've seen Bitcoin come back down. We've seen the stock market come back down with the inflation data. We were told that Bitcoin was going to get a melt up. We were told the stock market was going to get this melt up. That's what we were told. And we've turned down. So again, going to get a bigger drop. Now, this week we have Powell, okay, testifying 2 days before Congress. Next week we got the inflation data on Tuesday, the 14th, and then the 15th. You've got the CPI on the 14th. You've got the PPI inflation data on the 15th. The following week, on Wednesday, you've got the Fed on the 22nd. So every single week, you've got something. So the question becomes, are we going to get a rebound with Powell next week? Does he come out? He says his hawkish statements. The market ignores it, and he says disinflation. And they get the vapors and some kind of bigger rally above the 20-period moving average on the S&P. Or we get rejection at the 20-period moving average on the S&P 500, and we just see a bloodbath for the next 3 weeks. We sell off with Powell this week here, sharply. We sell off with the inflation data sharply, and then we sell off with the Fed because the Fed is going to raise the projections for the Fed funds rate. They're going to, I told you the last time they raised projections that they were going to raise it above 5%. It fell on deaf ears. I knew it was going to happen, and I told you the market was going to freak out, and we were going to have a negative reaction to it, and that's exactly what happened. It blindsided the market because the market said, "Oh, the Fed's not going to take rates above 5%," but yet the target level was raised to the 5.25% level. The exact level is 5.10, which would take the terminal rate to the 5.25% level. This time they're going to raise it to the 5.5% level at least. Prices are going to raise by 0.5% this time around, and the market's not expecting that. Fed fund futures started to price that in, as I talked about. I warned about it before Fed fund futures, when it wasn't even on the radar screen. The bond market was going to begin to price in a more aggressive Fed and, price in hotter inflation with the inflation reports that we were going to get, which we correctly predicted would happen. So again, everything I've told you has now happened, okay? And the question now is, again, I believe we're in a counter trend with the stock market. We may see Bitcoin try to rally a little bit. Look, I'm telling you, it is going to fail. Whether we get the ascending broadening wedge, here, and we get one more push up into the highs, and then we fail here into the 26,000, maybe as high as the 27,000 range, and fail, or whether we get a lower high or come down a little bit lower and try to bounce and then do it like that. However it plays out, we get the head and shoulders, or whether we just break down and move into free fall, can't get back above the 50. However it plays out, look, it's going to fail. I don't know how else I can say it. The question is it going to just be a bloodbath and we're going to just move into a free fall over the next 3 weeks? Powell's testimony, followed by the following week with inflation data, 2 key inflation reports that are likely going to go up on a year-over-year basis, as I've been predicting. We had it happen with the PCE, but I warned you that, again, I'm predicting that we're going to see that happen just as I predicted we are going to see the uptick in inflation. That happened. I predict we're going to see the year-over-year inflation data tick up, and the market will likely sell off on that. Then you're going to get the Fed raising the projections for the Fed funds rate. The Fed is likely going to go 0.5%, and the market is probably going to sell off on that. Can we rally with Powell next week? A little bit more time, sell off with the inflation data or with the Fed the following 2 weeks, or do we just sell off week after week after week in a total bloodbath, a wave 3 crash in the stock market? And again, Bitcoin is going to come down to the 18,000 level. And then if it takes out that level, it's going to take out the previous lows from November. We were told that we were going to have, the Moon Boys told us, we were going to have a melt up right here. It didn't happen. We sold off 12%. Then we were told we were going to have a melt up right here, and now we have sold off Well, we're selling off on the Silvergate fallout. Well, if that didn't happen, then it would. You see, and they make these excuses. Okay, and again, I'm telling you, you got negative diversions telling you you're going to go lower. Maybe you get one more push higher. Maybe we get this. I mean, it would be a nice looking technical pattern if it formed. I'm telling you, I'm still open-minded to one more push higher. It's still possible because you still have a trend line here that's being tested. We came right to the trend line. Still possible we push higher and form the ascending broadening wedge and complete that and then get the dump. Okay, regardless how it plays out, look. We've had another sell-off with the negative diversions. Do we form another reference point? Possibly. But again, here we were told we're going to get a melt up. We dropped 12%. Okay? Here we were told, okay, now we're going to get the melt up. Here we go. We're above this high. Here we go. And what happened? We dropped now over 13%. Okay? Now, maybe we get a bounce off this trend line. Maybe we break it. Okay? Maybe we break it. We get the head and shoulders, and then we get a bounce. Maybe this high holds, maybe it doesn't. Regardless, I'm showing you the possibilities. Doesn't matter. The rally is going to fail. Bitcoin is going to go lower. Whether you have it go lower with this negative diversions here, or whether you get another reference point of a divergence and you get the ascending broadening wedge completing, doesn't matter. It's going to fail. Again, he's talking about the ascending broadening wedge because the Moon Boys, they only tell us about the bullish patterns. They never tell us about the bearish patterns. And that's the problem. Again, when you have the confirmational bias, when you only believe Bitcoin goes up. Again, Bitcoin went to new lows in November. We were told that was not going to happen. We were told this sell-off was not going to happen. We were told this sell-off was not going to happen. That we were going to have the melt up. Here we go. And it failed. Here we go. And it failed. So you have to understand, again, this is being designed to suck in as many people as possible into believing Bitcoin's in a new bull market. And again, there is more work to be done. Bitcoin is going to come back down and set up a higher low, form a large inverse head and shoulders, which again, we're being told that's not going to happen. It's not going to go below the 200 period moving average again. And here we go, yada, 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 all the same garbage that they said at 69,000, they're saying again here. Look, there's too many bulls. You do not have capitulation. And believe me, we need capitulation. Either you have more of a consolidation to happen, and you've got to drop down to the 17,000, 18,000 level and consolidate further and dash hopes, or you're going to really dash hopes and take out the November low. Which if I bring it up here, again, the November low down over here, there is a strong possibility that with the breaking of the rising wedge, that, hey, that's it. You know, maybe we back test it. Maybe we don't. The best moves don't back test. But like I said, you bounce off this trend line. You've got your possible ascending broadening wedge. You get a false breakout above this level, sucking more people in. And then that's it. You come up here, 26, 27,000 or whatever. And then you tank, and that's the end of it. And then rather than a horizontal neckline, you've got your slanted neckline, and then you got a possible right shoulder that can develop if this low can hold, but there's more work to be done. Again, as I keep saying, look, Bitcoin is in a trading range. Okay, it has gone sideways. Whichever way we break, and I'm not talking about a false breakout. I mean, maybe we come up here and we get a false breakout that fails, and then we come back and start dropping back below the 50 and the 200 again if we try to get back above the 50 here. But I'm talking about a real breakout. So say we come back, we get a higher low, and then eventually we establish a higher low, and we can get a right shoulder, and you've got your inverse head and shoulders completing. Now that would be legitimate, and that would validate this as a bottom over here when you would get a higher low established and then get a higher high and break out of this trading range finally. That would establish it as a bottoming process. Very open-minded to that. That very well may be the case. I doubt it. I believe that we're going to take out this low in all likelihood. Because, Bitcoin and the stock market, they didn't believe that the Fed was going to take rates above 5%. They didn't believe that the Fed was going to keep the rates extended elevated for an extended period of time. They said, the Fed's going to pivot in 2023. The Fed's saying, no, we're not. They're saying the Fed's not going to take rates above 5%. The Fed said, no, we're not. We're going to take rates above 5%. the stock market, investors and traders saying, hey, the Fed's going to, maybe do one more hike in March, and then that's going to be it. They're going to pause, or they're going to pivot. And as I've said, the Fed clearly signaled that that's not going to be the case. So maybe you get 0.5% hike in March, and the Fed pauses in May, and you get a bottom, possibly, or it drags on into June, maybe. But I'm just telling you, again, they're going to raise the projections. The market is in fantasy. The investors and traders are in fantasy land, and we're going to get a bigger sell. The question is it going to be a bloodbath here in March, where we just sell off week after week after week going forward? Or do we get a little bit more time with Powell? And that's what I'm going to be watching. Now, as I've talked about at great length and detail, again, we're being told Bitcoin's bottom, it broke a trend line. It's broken all kinds of trend lines. We broke this trend line. That didn't stop, the counter trend rally. That didn't stop new lows from happening. During the 1929 crash, we broke the trend line. We broke out of a trend line, a downtrend, 6 or 7 times. It didn't stop new lows from happening. Okay, breaking a trend line. Trend lines change all the time. Okay, but again, if we have come up here and hit this level at horizontal resistance, which we turned off of right now, again, it makes for a nice channel. If we end up dropping down sharply, down into one of these trend lines. Okay, very, very possible that we see that happen going into May or June. Very, very possible. That's just a bunch of fun. There's no way that's going to happen. Are you kidding me? Look, when I called the very day of the top for Bitcoin back up here, everybody told us we had a breakout, just like they told us right here. What's a breakout? No, it was a fake out. Okay, that's what this is right here. Either there's more work to be done, we get an inverse head and shoulders to mark a bottom here, okay, or we get a dump that's going to take us down, that's going to pull the carpet out from under the Moon Boys and all the Moon Boy followers, and totally devastate them there, where it does create capitulation, to where they don't ever want anything to do with Bitcoin again. They don't want to hear about crypto. They don't want to read about crypto. They don't want to watch videos about crypto. They're done. That's capitulation, my friend. Okay? All this hype surrounding this, is, it's hope, and it's hype and hopium. I'm telling you, the whales may have just let it go back up so they can dump it on them one more time, maybe back to one of these trend lines. But you take out this high right here. This is 13,827. You take that level out, and you are going to go lower. So I'm watching this low here. What was it, 15,000 or so, and then our low over here at 13,000. And again, those levels are really important. Then you have the trend lines here from these lows to the June low there. The red trend line, that comes into play. And then you have this parallel boundary that I've drawn from this level. Now, again, that channel may change if we do get one more push up to 26 or 27,000 and then get a dump. But I'll be watching. If this level holds, that's going to be bullish. If you don't drop below 13,827, that's bullish, and you got a shot at the inverse head and shoulders. You take it out, forget it. You are going down to 8,000 or 9,000 to one of these trend lines down here that I've been talking about. And again, you're going to see capitulation, and you're going to see a brutal drop, a free fall, a waterfall type of a sell-off that's going to be extremely painful and scare the pants off most people. And then by the time we get down to 8,000 or 9,000, nobody's going to be interested in Bitcoin. You have the Moon Boys that, call bottom every single week. My favorite Moon Boy does anyways. I don't know about yours, but mine does. Every single week he calls a bottom. Eventually it's going to be right. I am looking for a bottom. I'm just correct because I have good indicators. My signals called the very day of the top. Told you these lows are pointing to the next high. Were they not? Yes. The diversions played out. You're forming now a negative divergence, just like what you had at the top. You see the bullish diversions. The bullish diversions gave us a bounce. Now we have negative diversions. And again, maybe we get one more reference point to it. I'll show you in a moment on the RSI. But maybe it's done, and that's it. And we turn down off horizontal resistance, and that's all she wrote. So if we go above it, you'll get a head fake like we had back over here, where we pushed above this level, or back over here, where we pushed above this level, and then it failed. So again, whale's going to allow the Moon Boys to be duped one more time, or as they peek in. But listen to me, look, we're going to have more work to be done to either validate this consolidation as a bottom above 13,827, or you're going to take it out and come down to these levels, which again, that is very, 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 very possible, and I would not ignore that. The Fed has more work to be done. We were told, oh, the Fed, we have inflation happening, and oh, Bitcoin's a great hedge against inflation. Yeah, right. It went the opposite direction. Okay, I told you that was a bunch of, nonsense back up when it was said at higher levels. Fed has to raise rates to combat inflation. The dollar rise, we're seeing yields rise, and we're seeing Bitcoin and the stock market drop. Okay, that's the truth of the matter. Look, the stock market is in a counter trend rally right now. It's going to set up a lower high. When it's done, it's going to drop. Can Bitcoin rebound to a slightly higher level, or does it make a lower high? Maybe go slightly higher, but it's going to fail. And then the question is, do we take out this trend line right here? This is the most important trend line in crypto right now, this horizontal level of support at 13,827, this peak over here, because if you take that out, you're going lower, my friend. You can hold above it. That's going to be a sign of strength. I talk about the stock market a lot in my videos because it has a positive correlation with Bitcoin. My signals predicted we were going to get a bounce surrounding the 200 period moving average. And I said that Bitcoin was likely going to bottom out around 39.10 to 39.30. It bottomed out at 39.28 and it rebounded. It got it bullish engulfing, got it confirmed, and we got back above the 10. Okay? And we got back above the 50, the green line there. We're just underneath the 20. Because what's going to happen is the counter trend is either going to stall around the 20, or maybe we pull back and come back up to it or whatever, and ho-hum around with Powell, whatever. We are either going to stall around the 20 or get above the 20 to a Fibonacci retracement. If I bring up the Fibonacci retracements from the last minor high that was developed, again, we could go up here into the golden pocket here, but listen to me very carefully. Whether we get a bigger rally or whether it stalls at the 20 period, we're going to go lower. Once this move is done, the S&P is going to go lower. And when it does, Bitcoin is going to go lower. And that's why I say, is it going to be that we just have a bloodbath for the next 3 weeks? Sell off this week here with Powell in his testimony before Congress, that we sell off with the inflation data the following week, and then the week after that with the Fed, and we just see this bloodbath. Or do we see a rally with Powell to buy a little bit more time with maybe Bitcoin, maybe with the stock market, and we get above the 20 period and we stall out? But look, every time the 20 period's rolling over, the 10's below the 20 period's rolling over. During this decline with the stock market, we've had either rejection in the past when we've turned down. We've had rejection at the 20 period back over here after the August high, rejection at the 20 period, okay, or just slightly above it, or we've gotten above it for a little while. And again, look, rejection at the 20 period here off the January peak, and then we got above it here, and again, you went to a Fibonacci retracement here, and then we got rejection at the 20 period. After the March rally, again, rejection at the blue line, the 20 period, rejection at the 20 period. Here we got above it in May, got above the 20 period briefly, but then we got rejection again at a Fibonacci from the last minor high. Every time you've had a move above the 20, in the downtrend, you've gotten a rejection at the Fibonacci retracement. You know, with February over here, we went up into the golden pocket, and then we dropped right back below it. Here in May, we got above the 20 period, we went to the golden pocket, and then we dropped right back below it. We had the free fall in June. Over here, we had the free fall into the February low. So again, here we've actually got above it for one session, but we did have a Fibonacci retracement into the golden pocket after the August peak. So look, the arrows mark where we got rejection at the 20 period. The circles over here mark where we got a bounce. Now we dropped below the 20 period here in December. We went up, we got 100% retracement, and we formed a double top. So that was still part of the topping process. My point is look, we've dropped down to the 200. We're trying to bounce. You're going to have all these people yelling, back test, back test. Okay, we've taken out the trend line ever so slightly. We hit the 200, we're bouncing. And then again, maybe it's bigger with Powell. Maybe we get a bigger rebound with Powell. Maybe we don't. Maybe the bloodbath starts with Powell. I don't know. But because yields are starting to come down and forming negative diversion. So maybe we buy a little bit more time with Powell. I don't know. But I'm telling you, look, the rally's going to fail on the stock market. And again, it's going to end up that we're going to start taking out this 200 period rather than bouncing off of it 3 times. We're going to eventually get a counter trend. Maybe we pull back Monday, we rally up with Powell. Maybe we hit a Fibonacci. Maybe we don't. Maybe we just get rejection. Maybe we bounce off the 200 and then move into the free fall with Powell immediately. I don't know which way it's going to play out, but I'm telling you, this move is going to fail. My signals predicted it would happen correctly. Watch my stock video on the Ron Walker channel. You would be knowing that the signals correctly called this, just as they correctly called the February 2nd peak as the top and predicted the crash. We've dropped 6.5% on the S&P. We've dropped 8.5% on NASDAQ. They got it right. Question now is this going to fail at the 20 period, or is it going to go a little bit higher? And that's what I'm watching, because again, Bitcoin may buy a little bit more time if we can try to rally with Powell next week, but it's still very possible that if Powell takes a very hawkish tone, that we drop. But I'm just telling you, the last couple of times we've had Powell come out, over here we had the FOMC meeting and Powell came out with his press conference. He said disinflation. They ignored every other hawkish thing he said, and we had an exhaustion gap and we had a post-Fed peak, as I correctly predicted would happen. We had the Powell name. We rallied. He said disinflation again, and again, the dumb money bought it, the smart money sold it. The same is true here. I told you the buy the dip crowd is going to come here, and the profit takers from the sell-off. Do we stall at the 20 period, or do we stall at a Fibonacci retracement? I don't know, but I'm telling you the rally is going to fail. So if we can get a bigger rally, is what I'm telling you, Bitcoin, if we get a bigger rally with the S&P 500, then Bitcoin can possibly get a bigger rally back up with Powell. If we don't, if we hold below the 50 period, or if we just back test the broken trend line of the rising wedge on Bitcoin again, and we've already done a little tiny back test. We had a slight breach of it, and then we kind of back tested it, and again, maybe we attempt another test of the trend line, and then we fail or whatever. But again, that's why I just showed you. Again, look, we got the possible ascending broadening wedge. We've got a possible head and shoulders here. Whichever way it plays out, we'll see. But again, eventually we're going to come back and take out the 200 period moving average. Can we get back above the 50? It buys us a little bit more time. Can we get back above the 20 and the 10? Maybe. But, this rally we've had back up, the Moon Boys are acting like, oh, it was just a continuation of this, and that the 12% drop, oh, that didn't happen. We don't see that. Or the 13% drop right here, oh, that didn't happen. We don't see that. That Bitcoin went down. We don't see that Bitcoin goes down. We only see it goes up. I've never seen anything like it. It's amazing. Prices go up and prices go down, man. That's the way markets work. These people dare to say Bitcoin's going to go down, people will not listen to them. I really don't care if Bitcoin goes up or down. I'm not interested in the bullish side. I'm not interested in the bearish side. I'm interested in the right side of the trade. You have people out there that have confirmational bias that only think that Bitcoin goes up. It is absolutely amazing. I've seen perma bulls in the stock market, but I have never seen anything like the perma bull Bitcoin and crypto bulls that are out there. It is absolutely amazing. The breakdown of the rising wedge, that may be it, but you still have the possibility of the ascending broadening wedge that I just talked about. So it could be a fake out, and then we do it. Could be a head and shoulders if we come down to horizontal support and we get a rebound with a lower high. But if you just start moving down below this level right here, you start taking out this horizontal level of support, and you don't get any kind of meaningful bounce back up, and you just start losing this level, you're going to come down to the 200 period. And again, maybe that's all she wrote. You have the diversions complete. Now, again, maybe we get one more reference point. Certainly possible. I'm open-minded to that. But like I keep saying, regardless, whether the ascending broadening wedge plays out and we get one more push higher, or whether we have the peak in with this diversion so we get a lower high, or just move into a free fall now and it's done and hold below the 50 period, doesn't matter. We're going to go lower. So again, we'll be watching the horizontal support here, right here above the 21,000 area. We'll be watching the 200 period moving average here just below 20,000. Now the 100 period's trying to turn back above it. We'll be looking for those moving averages to eventually be taken out. If we bounce, watch the 400 period here, right around the 26,000 area, the low 26,000, and again the upper boundary of the trend line here, which again could form the larger ascending broadening wedge. But we do have a bearish rising wedge. That's the upper boundary of the rising wedge, which again, that might be, very well might be the peak now. The negative divergences, MACD is ticking down towards the center line now, below the center line, inching down here. So again, Bitcoin is on borrowed time. Here I have the inverse head and shoulders marked, and we have, as we come down, the stochastic reaching extreme. So maybe we attempt to rebound back up, but as we're turning down 13% lower, which we were told was not going to happen, just like the 12% drop was not going to happen, well, we're seeing parameter roll over. So again, not good. You got the Moonboy oscillator that formed a negative divergence. Again, we might try to form one more reference point possible, but again, it predicted the 12% drop we had by rolling over here. Then it turned back up. Let me just mark that there. And it predicted we were going to get another drop turning back down. I told you it may be that this better defines, we go up one more time, but again, it was predicting with the divergence, solve was going to happen, and again, it did. We dropped 13% so far. Now, again, as I said, you might get one more push higher, but it is very, very possible that we have stalled here at horizontal resistance, and that is all she wrote, okay? Moonboy oscillator, again, showed complete complacency with both of these peaks for the Moonboys, which again, we've sold off. They told us that was not going to happen. We were told over and over, we're going to have this melt up on Bitcoin, and it didn't happen. We have stalled in the trading range at horizontal resistance. There's been no melt up. Told that from the high right there, we were going to have a melt up. And then from this high, we were told we were going to have this melt up. Here we go. And it didn't happen. We sold off 13%. You know, the Moonboys keep telling us we're going to have this melt up. Well, we're forming this negative divergence. I've been talking about it with the RSI right here. As we hit the 50-week moving average and the 200 as they get a death cross. They want to tell us about the bullish golden cross in the daily time frame, but we better not say that there's a death cross in the weekly time frame. That's a big no-no. We only say that Bitcoin's going to go up. We don't say Bitcoin is at risk of going down. So it's absolutely amazing. Again, I told you we broke this trend line, and again, we have nothing more than a expansion of the channel. Right now, we're turning down yet again this week. Our recent high, turning down off of the 50-week and the 200-week moving average. We've now dropped 13% from those levels, forming this negative divergence. You not only have it on the RSI, but you've got it on the money flow down here. Look at the money flow. Now, again, maybe you form one more point of divergence. Possible. Don't want to rule it out. And if we do, we're going to go back up and we're going to slam right into that trend line and get one more push higher and then go down. But look, it is very possible that that's it, that we got rejection there at the 200-week and the 50-week moving average here in the weekly time frame. It was a negative divergence on the money flow that marked the top, okay, back in November. Okay, exactly what we have right now. If we have peaked, I've drawn a parallel boundary with the upper boundary there. And again, maybe the channel is just, the trend lines are expanding, changing, and the channel's expanding here. And eventually we come down here into May or June into the Fed meeting and bottom out if we take out the November lows. So again, be very open-minded. It could play on either way. I'm open-minded to a higher low scenario or a lower low scenario. Again, I'm not interested in the bullish side or the bearish side. I'm interested in being right. So I'm trying to remain open-minded and objective to either scenario. But again, they're seeing that we had a bullish divergence here on indicators, like the RSI up here. We had this bullish divergence that formed that's given us a bounce. I told you over here we were going to get a bounce, and we marked a short-term bottom over here. But while we had the bounce with a bullish divergence, again, the negative divergence is completely ignored. We don't want to talk about that. We don't see that. Now, one other thing on the stochastic, and that is right here, is that, again, if we do get that one more push up, you could form a divergence here on the stochastic. If we continue to break down, then I'll be looking for a sharp push here back below 80, you know, holding below. Right now we're hovering right at that 80 level. So do we buy a little more time and get a bounce and maybe validate a divergence, another reference point of a divergence on the RSI in the daily time frame, or get a lower high possibly, you know, form the ascending broadening wedge, get a higher high, or get a head and shoulders, or maybe, you know, just a feeble back test. But again, going to be looking for a rejection in this neighborhood surrounding these moving averages, and maybe we get a head fake, you know, above them. Maybe we just stall right here, right now at horizontal resistance, and eventually get that right shoulder or the breakdown down to this lower channel area. So that's what I'm watching. We'll be watching Bitcoin as we go into next week with Powell's testimony before Congress on Tuesday and Wednesday, 10 a.m. Eastern Time. Please support the channel with the link directly below that allows us to be able to provide you this information. These signals called the top correctly, predicted the crash correctly. I'm confident they're going to call the bottom. So if you like that information, let me know that by supporting what we're trying to do here. I don't have any sponsors, so I just have a direct relationship with you and ask that you support what we're trying to do, so I don't have to sell you a bunch of stuff or send you to exchanges that are going to go bankrupt and things like that. I don't want to go there, so just please support
that means you
the
can
channel.
now set your stop loss below wherever that area was that was set, the deviation.
Hello everybody and welcome to another amazing video of DIY investing. Bitcoin and the rest of the altcoins are seeing downside. This is what I talked about in my last couple videos, analyzing why I believe that we're most likely going to be in for a deeper correction and how to go about profiting off that correction when it happens. For today's video, I'm going to be brushing up on some of the same points. We're going to go into a deep dive of the shorter time frames of Bitcoin and Ethereum so that we know exactly how to play this next correction that's coming. And then I'm going to be finishing it up by talking about one of the very best performing altcoins over the last couple months that's up over 2.5x since I gave the word about it just a few months ago. Thank you guys so much for tuning in, and with that being said, let's jump right into it today. Alrighty guys, now here we are to start off today's video. We're going to be diving into the shorter time frames of Bitcoin and giving you guys an idea of what I think is going to be happening from here. Now you guys already know in my last video, we were all the way up here and looked like we were potentially going to be breaking out. And I continue to stick to my analysis that basically said that we're most likely not going to end up breaking out of the range highs from August at 25,000. We're probably going to end up starting a deeper correction back down. And from that point, the market has sold off. We weren't actually able to hold support above here. And now the market's looking even more weak. And if we come down here and look at it, it looks to me like we're consolidating within this channel, which is once again something that's going to happen when you're looking at corrective type of sequences. This to me looks like some rough example of an ABC correction. And once we actually break down from this, in my opinion, that's going to set us up for a much bigger drop all the way back down to the range lows that we were at right before we rallied upwards into the August highs, which price-wise is going to be about $21,500. And I think it's likely that that's the area that we're headed next. You know, after this point, once we come back down here, I do believe that we would actually source enough liquidity to have some type of a bounce. You know, we might see an ABC back all the way back up to retest some of these range highs that were set here over in our wave 3 high. So if you guys remember, based off of our Elliott wave count, this was wave 1, this was wave 3, this was 4, and then that was 5. So I would expect that we would bounce once we come back down here onto support of our wave 4 structure, because generally that's an area where there is a decent amount of liquidity. This does look like that would be the end to our short-term correction, and I would expect at least some type of a bounce. And that bounce could easily take us back into contact with the top of this wave 3 high. And so I do believe that this is going to be a pretty choppy period nonetheless, but I don't believe that after that move happens that this is going to be over by any stretch of the woods. What it looks like to me, as we'd most likely be completing some type of A, B, and then I would still expect that we get a deeper C wave decline right down in here. That's just what makes the most sense to me based off of what the market structure is telling us. It looks like we're going to get 5 waves down. After that 5 wave, we would expect to see some type of ABC correction and a bounce to the upside. After that is where we'd expect to see one more final drop into our wave C, which is basically going to be taking us back down to this entire support cluster all the way back down in here. That's pretty much what I'm watching for. The question is, how deep is this wave C going to go? We know that based off of our Fibonacci that we would be expecting at least a move down to about the low 19,000s, $19,200 approximately. So really anywhere within this box is going to be a pretty good area to target. I would say originally the best place to start would probably be down here at the 0.5. It's not a bad idea to grab some bids down here, place some bids, and just simply look to accumulate, because oftentimes, you know, what we often do to ourselves is we get too overconfident thinking that we're going to nail the exact bottom or sell the exact top, when that's never what we actually end up doing. Very rarely are you going to be that guy that nails the exact top or nails the exact bottom. And what we should focus on doing is simply look to capture the majority of the move. Now that the market is starting to break down, it's starting to show more weakness. We've got rejected off of these wave 3 highs a couple different times now. To me, it's looking like we're getting ready to spill over to about $21,500. And after that move, you know, I do expect that we're going to get a little bit of momentum. And we talked about that in my last video. And if we come over here and actually take a look at Polkadot, in my opinion, this is a pretty good example. We're going to remove our resistance over here, and we're going to focus on the 618 support. But this is pretty much in that same boat, where we got 5 waves up, and we're expecting to see some type of corrective wave back down to the 618. Now, the thing with this is it looks like we're going to retest down here at about this 0.5 region, and then we'll probably end up getting a little bit of a relief bounce. And I do believe that that relief bounce will take us back up to the highs of wave 3. And after that point, we would still expect to see a larger wave C decline that would take us back down to the 618 fib. And so that's literally what I'm going to be watching over here with Bitcoin as well. The only problem with Bitcoin is it hasn't got that final drop to take us back down to the wave 4 support. And I do believe that once we actually break below this current support inside of this trend, inside of this channel that we're in right now, we're going to get a quick spill back down to that level. And so once that happens, you know, there's still plenty of people that are expecting more upside. There's still a lot of people that are looking at that. And so I do believe that we'll see a short-term relief bounce. You know, the relief bounce doesn't have to go all the way to the top of the wave 3 highs, but a bigger bounce nonetheless, at least back up into the prior consolidation of pretty much where we're at today, is what I would expect before getting that larger move to the downside. Overall, I think that we should be expecting the bottom of this corrective move to be taking us somewhere around the end of March to sometime into maybe even the end of April. It's hard to say exactly. We don't know the exact times that it's going to take, but I would say that around the end of March, sometime in April, will most likely end up being the bottom of that correction. And so this is what I'm watching from Bitcoin in the shorter time frames. If we remove some of these drawing tools in here, let's take a look at what is actually forming on a larger scale, which if we zoom out here, the way that I kind of think that the market structure is going to take is, if we get to a bigger time frame, let's go to a weekly. Let's look at Bitcoin on the weekly, because one of the things that I was telling me that we're most likely at a topping point already is the fact when we come down here and look at our momentum indicators, the RSI, in my opinion, is not the greatest momentum indicator to use, although it is one of the most common. Everybody seems to use this, but for me, I find it much more relatable if I compare it with the OBV. The OBV gives better signals, it's a little bit more direct, and the RSI can actually stay overbought or oversold for long given periods of time. The only problem with the RSI is the fact that you're going to get mixed signals. Sometimes you can continue to see this market pull back and make lower lows and lower highs as the price is going up, and that was what we actually saw over here inside of our bull market for a long period of time. We actually saw, technically the RSI topped right here, and then we started to see this downtrend that was taking place, and that was all the way over here. So we saw multiple different highs, and it was giving us mixed signals throughout that period. So it's not the greatest indicator to use by itself, but when we compare it to the OBV, we get a lot stronger confirmation. And most recently, we saw a higher high in price, and yet none of the momentum indicators broke out. The RSI has made a double top basically, and the OBV has made a lower high. And so because the OBV is giving me a lower high and the RSI wasn't able to break out either, I do believe that this is going to end up getting exhausted and we're going to come down. And it makes sense that these indicators would be telling us this, because if we look at the price, we already had 5 waves up. Inside of wave 5, which is what you're going to see at the top of an Elliott wave cycle, it would make sense that that would also flash our momentum indicators telling us that the short-term trend is exhausted. So with that being said, I am expecting that we're going to come back down to this green level. And if we look at what that will actually end up forming on a bigger time frame, let's assume we get back down to this level. We might bounce a little bit. But overall, we're going to expect to come back down into contact with this green level around the 618. And if we're looking at this based off of a charting pattern principle, what it looks like to me is that we would have a pretty clean inverse head and shoulder formation that could be forming. And this is just the most accurate way that I see the market going. I mean, either way, no matter what the short term takes, I do believe that we're going to come back down and retest this green level. And if we come back down and retest this green level, it's going to set up in a type of way that looks just like a inverse head and shoulder, which is a reversal pattern. And if we're looking at this as a reversal pattern, the way that you would measure this out for targets is you take the top of the range, the shoulder, or I should say the neckline of the head and shoulder formation, and the more symmetrical that these line up, the more accurate the pattern. And because we're on a weekly time frame, because it's a bigger, more expansive pattern, that also gives it more validity, right? And so if that's what we're looking at, the way that you would measure a target is from the top of the neckline down to the bottom of the head, and then you would basically just move this to the top on the other side, and then that would be giving us a target of about $35,500, which if I come over here and draw a line, it'd be about right here. And so that next breakout that we would expect to see somewhere, around April, I would say, sometime in April is where I think that we'd end up bottoming. We would expect to see a pretty decent breakout. Once we could actually clear the neckline, then I think it's going to be a pretty quick impulse upwards of this region. And here's the thing, guys, because this first impulse down here was our first 1, 2, 3, 4, and 5 Elliott wave, that means that this entire first move is just a one wave, right? There's always 3 impulse waves for every wave. This was our first 3 set of impulse waves. That completed wave 1. We're working on the corrective sequence. That'll give us wave 2. And then what'll follow after is a wave 3 impulse, wave 4 correction, and then we still have a whole nother wave 5 to go. And so if we're looking at this based off of Elliott wave theory rules, what we'd be looking at here, if we were trying to measure out how high this wave 2, or how high the wave 3 should go, I should say, we'd be looking at almost exactly the same distance to the neckline, because we need to see inside of a wave 3 that it hits at least the 1618, because that would resemble that it's at least the same size as the last impulse. Wave 3s cannot be smaller than a wave 1, and so you have to go to at least the 1618. They can be the same size, but the wave 3 can't be smaller. And so it makes sense to me that the very beginning, that the threshold for our wave 3 would be hitting at the same exact target for our neckline of the inverse head and shoulder. So what that tells me is that we could actually overextend past the 618, because like I said, it stated, this is a wave 3. Wave 3s have to be at least the same size as wave 1. They cannot be smaller. So inside of a wave 3, oftentimes they are actually bigger than wave 1. Oftentimes they can be a little bit more overextended, because in a wave 3, that's generally where the most volume comes in. It's generally the most impulsive wave that exists based off of Elliott wave theory. And so, we could literally see a move all the way upwards of, somewhere in between the 2618 and the 1618, and this thing could all the way go up to the 2618 and make it double the size of wave 1, which is generally what we're going to see. I mean, if we got in here to the shorter time frames of just our most recent impulse, it makes a lot of sense, because you guys can actually be able to see those Elliott waves, a little bit easier. See, this is a wave 1, it's a wave 2, and then this was a wave 3, right? So wave 3s are oftentimes a lot bigger, and then wave 5 is sometimes about the same size as wave 1, generally based off Elliott wave theory rules, although it can differ. And so if we're looking at this on a bigger time frame, this being our first impulse, this next impulse could get overextended, and we could literally see this thing rally all the way upwards of about mid 40,000s to even $50,000. We don't know 100%, but what we can know based off of a general rule that Elliott wave gives us, and also charting principles being an inverse head and shoulder, we know that our target would be at least 35,000 and a half, because that would make the wave 3 the same size as our first wave, and then it would also coincide perfectly with our neckline target. So this is what I'm watching out for with Bitcoin, guys. I think that this next dip is going to be a truly amazing opportunity to be getting in for anybody that's taking profits, for anybody that looks to just want to dump more cash into the market. I don't think you're going to find a better opportunity, because you're going to have a ton of people claiming that we're going to go to lower lows. Those people never end up buying, but once we actually end up holding support and get this massive support and resistance flip, the next impulse coming is going to be pretty parabolic, at least in the short term. This year is going to be very profitable for those that are prepared, and this next dip is going to be a huge opportunity to get more prepared for that long-term trend. Now, next up on the list is going to be Ethereum, and Ethereum's pretty much in the same boat, although it just had a weaker 5-wave impulse. This thing barely broke out, but when I look at this, it looks the same as Bitcoin. It looks like we just finished an ABC up, and it's looking like this is most likely going to resolve into, you know, an impulse back down to the wave 4 lows at about, this one's going to be about $15,000. But regardless, with Ethereum, you know, you're looking at still a pretty sizable drop nonetheless. If we're looking at Ethereum here from the top to the bottom, the 618 is going to be taking us all the way back down to about $1,330, which is going to be pretty much dead in the middle of this, oops, wrong one, which is going to be pretty much dead in the middle of this entire consolidation here. And so that's where we would be watching for. I would say, you know, somewhere right around here to just be a little bit more precise, straight in the middle of this prior consolidation leading into the FTX collapse. But the thing about Ethereum, guys, is the fact that it held better support. Bitcoin made a lower low. Ethereum made a higher high, so regardless, I don't think that this is anything to worry too much about. Even if this ends up underperforming and outperforming Bitcoin to the downside is what I really meant to get at that point. But what we're going to be looking at here is most likely just a retest of this prior trend. We'd correct back down even if we see a bounce. I still expect that we're going to get 5 impulse waves back down to the 618. And the 618 is going to be taking us right into contact with this main trend line that, in my opinion, is going to be the early foundation for this coming cycle. And so, you know, from where we're at today, all the way back down to the 618 would be a pretty sizable drop. You know, you're looking at about 18%. And so if Ethereum, being a high cap crypto, the number 2, is going to drop 18%, you know, a lot of altcoins are going to drop 30, 40% as well. And so that's just something to keep in note. That's just something to keep in mind of. Understand that we are most likely expecting to see a pretty decent correction on the way back down. And if you've made profit, you know, Ethereum is still sitting pretty close to these range highs. By taking some profit now, you're not really missing out on a whole lot, but you do have, you know, the potential of a 15 to 20% dip on the way back down to look to compound more of that gain. I understand not wanting to risk it too much because this is just the early part of the cycle, but I am expecting a correction back down, so I think that it's at least smart to talk about this. Now, guys, to wrap up this video, let's talk about the final crypto on today's list, which is going to be Hex. Now, Hex is one that has performed exceptionally well, and if you guys remember, if you follow me on Twitter, if not, go ahead and follow me. I actually talked about this, and I ended up buying this when it was at this low point inside of its Wave 2 correction. And the reason I ended up buying this was because I saw so many people that were angry at the creator, Richard Hart. There was a lot of people that were really upset at him, saying all of this FUD, saying that he's a scammer and all of this, but instead of it just being the normal crypto community, which always hates Richard Hart, this was the Hex community that was angry at him. And so they were making all these different things, making these big threads about him, saying that he was, you know, this and that. And when I saw how angry everybody was, I instantly knew that this was a very early part of an impulse, and most likely that this was going to break out. I mean, the reason I knew that this was an impulse is because we had clear Elliott waves. We had a perfect correction onto Wave 2, and then that's where I ended up putting $7,500 worth into it. And I drew this chart because I knew that it was about to break out in a big way. And if we come over here and actually look at the Hex chart, it's basically did exactly what I thought it would. And so if you guys are wondering, I bought down in here, it was about 0.24 cents. And so as it stands right now, from where I ended up buying to where it's at today, it's up about 2x. But I ended up selling up here at the top yesterday. And so if you're wondering, you know, I've had a lot of people asking me, how the heck are you trading Hex? You know, a lot of people saw that I was buying it and accumulating it. And, you know, I started accumulating this one over here, actually. My first buy was over here at about 33 or 3.5 cents approximately. And then it dipped for one more low. And then I bought another entry right here when I first started to see it impulse again. And so my average entry is, you know, somewhere in between both of these, probably right around 3 cents. And so it's up currently about 2x or so from that point, and I sold it a little over 2x because I did take profits yesterday. I've had a lot of comments asking me, you know, what I think about Hex, how am I trading this, and basically that's how I'm trading it. I drew this on Twitter quite a while ago that I was expecting a 5-wave impulse back up to the range highs, and from that point, that's exactly what we did, and we can see very clear Elliott waves in here in the same way that we can with Bitcoin and the rest of the altcoins. We saw 1, 2, 3, 4. And then in my opinion, wave 5 was yesterday when we just barely peaked above the range highs that we were at in August. And so this one's been one of the better performing altcoins. I mean, you don't normally see high cap cryptos worth multi-billions pulling a quick 2.5x, even 3x off of the exact low that we were at. And, you know, the reason I ended up personally buying more was just because I saw so many negative people, which perfectly coincides with the emotional psychology of a market cycle. I oftentimes talk to you guys about market cycles. We look at the Wall Street cheat sheet. We looked at the Wall Street cheat sheet yesterday, and I always talk about it because it's a perfect example of how to actually map out those emotions. And when we're looking at this, in my opinion, Hex just entered a new paradigm inside of its cycle, where we were basically in here. Capitulation, anger, depression. Capitulation, anger, depression. That was that entire consolidation. And so my first buys went underwater for, you know, about 40% loss actually from where I first bought over here. But once I started to see the new impulse forming, that's when I was okay with actually buying a little more, because I knew that most likely this thing was going to end up breaking out and making its first impulse into the new cycle, which ultimately takes us to the disbelief phase. And that's where I believe that we're at right now. Now, I'll be honest, guys, I do believe that we're at a topping point. Even if this manages to get one more little high, I don't care. I already took my profits, and so if you're wondering, you know, if you should take profits, I can't tell you what you should do, but I will tell you that yesterday I took profits after both of my buy orders from basically an average entry of 3 cents, let's just call it. And so now I've taken my profits. I am expecting that this thing is going to pull back pretty hard when the rest of the market pulls back as well. But it won't change anything. If we're looking at this based off of, you know, the way that the market structure looks itself, this to me just looks like we've just entered the disbelief phase. And when we get this pullback, like I believe we will, you know, something like this will come all the way back down to, you know, let's pull up where the 618 would be so that you guys can look a little bit easier. If we get down in here a little bit, the 618 is going to be taking us to about 4 cents. But to be honest, I wouldn't be surprised if this thing drops all the way back down to this entire prior consolidation, which was just previous support, and that'll be all the way down here at the 786. And so I really won't be surprised to see Hex drop all the way back down to that level. And if that's the case, you know, I made 2.5x on the way up, or about 2x approximately with my average entry. And so on the way back down, I would be looking to buy that dip for sure. I think that that would be a good opportunity, considering it would basically erase the entire first pump. And that's why I say, guys, even if we only hit the 618, that's still a massive drop from where we're at today. I think you're better off locking up some profits, because that's a 45% drop just to the 618. If we come all the way back down and retest prior support, that's like almost 60%. And so I want you guys to just be aware of that. If you're somebody that, you know, made some good profit, you followed me on Twitter and saw when I posted that, there's a lot of Hex people that saw when I put my $7,500 position into it, and a lot of them followed me. So if you've, you know, kept following me over the course of this time, I see comments all the time on YouTube asking me, you know, how am I trading Hex? What do I think about it? And this is what I think about it. I believe that we're at a top. I believe that we're about to start a deeper correction back down, and out of the whole market, this one's probably going to have one of the gnarlier pullbacks when compared to other altcoins. You know, like I said with Ethereum, it's looking like a 20% drop, maybe even 18%, whereas Hex is like a 45, 50, potentially even 60% drop. And so, in my opinion, because it pumped the hardest, it's going to fall the hardest, and that's just the way all altcoins are. The bigger the rise, the harder they fall, and that's going to be the case on every single altcoin that we see. The fact is, guys, this one, although it is a high cap, it pumped one of the hardest moves off of the lows, which is a very bullish sign nonetheless. It tells me that there's a lot of buy support, which is the whole reason why I bought it down here to begin with, because I did believe that it was going to break out in a big way. Now that it's broken out, we've already got our 5-wave impulse off the lows. I think we're going to be in for a deep correction, and everybody's going to be talking crap on Richard Hart again, because we'll be in this disbelief phase where they'll pull out some magic excuse saying that, oh, you keep delaying pulse chain, or you keep delaying this, and you say this and that, and now all of a sudden it's still not here. They're going to be angry because it's just around the price that they're angry. Everybody got really happy when the market started breaking out. Nobody was angry at Richard Hart anymore. Everybody started telling me that I'm not taking profits on this because pulse chain is so close to getting released. And I'm telling you guys right now, if you don't take profits, you're going to watch this thing break down. You're going to watch it sell off, retrace the entirety of the pump it just had, and then pulse chain still won't be released, and you'll be sitting there thinking, man, I could have compounded so much more hex right before Pulse Chain had I have taken profits, but I got too greedy thinking that Pulse Chain was just going to magically save me. I see a lot of people doing that, and it's no disrespect. If your plan is to hold long term, you've been long holding hex forever, by all means, continue to do that. But I'm here as somebody who's been through these cycles enough to understand when a market's most likely topped. I really believe that the markets are topped, and when this dip comes, you make way more money by compounding into more hex, even if you have to pay the short-term capital gains. I see other people making the excuse, well, by the time you take your profits, then you still end up making the same as you would had you have just held long-term because of short-term capital gains, which is not true at all. If you bought down in here, and then you take your profit, you made 2.5x, whatever that is, you're only getting taxed 30% of the gain, not the whole position. Whereas if the whole position pulls back 45%, you're losing way more doing that than you are simply taking some short-term profits. I'm telling you guys right now, whoever thinks about this stuff doesn't understand basic math, and that's coming from a person who literally hasn't passed a math class since the 8th grade. But it doesn't work like that. The numbers don't line up. You're still better off taking profits on a short-term position, risking the short-term capital gains tax, because you're still able to keep profit, you're still able to keep that same position, and you're still able to compound on the dip ahead. So it's not like it's a bad thing, and whoever tells you guys that type of stuff just doesn't understand trading, doesn't understand investing. And I'm telling you guys, if you're looking at a 45% drop that's on their way, wouldn't you just rather take a little bit of profit? I mean, it's not going to kill you by any means. You only have to give up 30% of the profit versus what you're going to be able to gain on a 45% drop compounding. It's just massive. But regardless, guys, what we're looking at big picture is this disbelief phase. And so what I think that's going to end up happening for Hex is in the same way Bitcoin's going to drop, in the same way all the other ones are going to drop, I think we'll bounce off this level. And then, you know, ultimately that'll set us in for the next breakout. And that next breakout, in my opinion, is going to be taking us all the way up here to about 20 cents at the top of this, you know, lower high that we were at. I do believe that that's most likely where Hex is going to be headed, because what Hex has coming for it is a wave 3 impulse. And because of how big this wave 1 impulse was off the lows, assuming that we've already topped like I think we have, let's assume that we go back down to this 618 region, you know, we have to go to a minimum target of 13 cents, and I do believe that because of how impulsive this first one was, I honestly think that we're going to rally upwards of the 2618, which is basically going to be 20 cents, and that's kind of what I'm watching out for with Hex. And so, big picture, I think that this one's going to continue to perform really well. I don't really see anything or any reason why it won't. Because it made such a big impulse off of the lows, it leads me to believe that there's still plenty of buy support in this market. There's still a lot of people that care about it. I know that Hex is one of the biggest communities out there, whether you have all the people that talk crap on it. I don't care. I know Pulse Chain is going to be a big deal. I sacrificed for Pulse Chain. I think all of the other projects inside of the ecosystem are going to be very, very well off. Bullish to be getting into those at the ground floor, because it's a whole new ecosystem that's going to spawn. There's going to be plenty of opportunities inside of it, even if, you know, the majority of them don't end up getting any type of mainstream adoption. There's enough adoption just inside little niches and little communities that you could still make life-changing gains off of a low-cap altcoin going 10, 20x, because it doesn't really take that many people to be buying something to get it to go to those prices in crypto. So with that being said, this is the video I had for you. Wanted to summarize some thoughts. Wanted to give you guys an update on Hex. I made a good amount of profit. I've taken that profit, and I expect a pretty decent sized dip. So if you're watching, wondering how I'm trading, that's how I'm trading it. If you guys want to be able to follow exacts, where I'm taking profits on all this stuff, where I plan to re-enter on all of these markets, how I'm dollar cost averaging, what NFT picks I'm buying, DeFi protocols, all of that type of stuff, anything that I'm doing with my money. Another thing is like, you know, seed funding opportunities, IDOs and things like that. If you guys want to be able to get access to some of those pre-sales, those are some of the better ways to make profit, and I never talk about those on YouTube until after they've already released. And so if you guys want to know how I'm diversifying, what I'm buying, what I'm selling, what I'm trading, and all of that stuff, links are in the description to go ahead and sign up on my website. I look forward to seeing you guys on there. Now is a great time more than ever before to do so. And with that being said, I love you guys. I'll catch you in the next one. As always, peace out.
What's up, Banter fam? It's your host Miles here, and today I have a very, very exciting show for you guys. I am going to show you how to program your own trading bot using ChatGPT. That's right, I have found a strategy that could potentially make you thousands of dollars utilizing the power of AI, where you can customize your own trading bot to your own parameters. Now, this video is going to be a tutorial on how to create one, how to import it into TradingView, and then how to actually use that strategy to backtest the results to work out whether it may or may not be a strategy for you to implement. It's actually crazy that in 2023 this is possible, and it really is the future. I'm super excited to bring this tutorial for you. The first thing I want to do before I get into the steps is shout out my man Thomas Crowlow, who gave me the inspiration behind this video. He posted a tutorial a couple of weeks ago which got the wheels in my head turning to actually do my own tutorial for you guys, so shout out to him. Without further ado, let's get straight into the strategy. So essentially, I'm going to be doing my first strategy on Bitcoin. You can use any altcoin that you would like to execute a strategy on. I just think Bitcoin is a good one because it's obviously the biggest coin in crypto, and it makes sense to start here. So the first thing you want to do is pick an indicator. Now, you can use a multitude of indicators for a custom strategy. For example, RSI, Bollinger Bands, moving averages, and all of them are going to have different results depending on the parameters that you set. So I'm going to show you two in today's video, but this is mostly for example purposes only. The best thing that you'll be able to do is when you do this on your own charts, go through and edit the parameters to get a set of results that actually fulfills your needs. But I'll show you an example using an indicator, which is the Bollinger Band indicator. Now, what you want to do is go up to indicators and type in your desired indicators. I'm going to type in Bollinger Bands. Then you want to scroll down into community scripts and make sure you click on the first one, which is by Madrid. But of course, if it's another indicator, it'll be by a different author. Click on that script, and what this is going to do is import Bollinger Bands into your TradingView. Now, in order to get the source code for the Bollinger Bands, you want to click on this little icon here, which is the parentheses. Click on that, and that will open up the source code. Now, what you need to do once you have the source code to an indicator, in order to get it correctly formatted for ChatGPT, you'll need to click on the name and create a new strategy. So I'm going to call this Bollinger Bands Strategy 1, and then click Save. And what this is going to do is create a copy of the original indicator, which you can now edit. Now, see how it says version 3? You'll need to change this to version 5 to be usable in ChatGPT. So just click on these three dots, click Convert to V4, click on the three dots again, click Convert to V5, and then this will bring up basically the source code needed for ChatGPT. What we now need to do is copy all of this source code and paste it into ChatGPT. So just looking at the chart up here, I want a strategy where it longs when the price closes above the upper band, and a strategy where it shorts when the price closes below the lower band. And this is going to basically trade momentum. You can choose any set of parameters that you personally want, but for the example of this video, those are the parameters that I am going to use to show you how this amazing ChatGPT trading strategy works. So in ChatGPT, I've asked it to code a strategy for PineScript V5. That is the first line that you'll need to enter. Now you need to tell ChatGPT when you want to long and when you want to short. So for me, on the Bollinger Band strategy, I want to enter a long when the price closes above the Bollinger Band and short when the price closes below the lower Bollinger Band. And I want to close the long when the short condition is met and close the short when the long condition is met. But of course, you can tell it to code it any way you want. You can tell it to enter a long when the price gets within 10% of the upper band or 10% of the lower band, or whatever you want. I'm just using this for the example of the video. The other thing that you want to do is scroll down and change the line indicator to strategy, because you don't want it to be an indicator anymore. You want it to be a fully fledged strategy that you can use to put back into TradingView to backtest. So this is essentially the code that I'll be entering into ChatGPT. I want to click enter, and what it's going to do now is automatically code a code for us on PineScript. Now, this is absolutely amazing because within just a few seconds, we already have a full strategy written for us. We want to copy the code in the top right. Then you want to go back onto TradingView, and in the last line after the original source code, you want to click paste, and then you want to click save. And this will save the source code onto TradingView. Now, there's going to be a lot of errors because that is just the name of the game here. But ChatGPT is very good at solving errors. So if you get any error codes, and if you do something wrong, you may get error codes, it's okay. You just copy that error code into ChatGPT and you tell it to do something like fix the code for the following error. And then you copy and paste the error in, and what it will do is it will create you a new code which will fix the errors. I've even done this in my testing a few times. I got an error after error using different indicators, but ChatGPT is awesome because it actually fixes code for you. So even if it's wrong, you can keep telling it where it's wrong, and eventually it will keep fixing the code to become better and better and better. Once you enter the message into ChatGPT, what it's going to do is it is going to create a full strategy for you to copy and enter back into TradingView. So we can see right now it is coding right in front of our eyes. I mean, this is absolutely crazy that you can literally code a trading bot using ChatGPT. Now you can come into the top corner and click copy code. And when you copy it, go back into TradingView, go onto your strategy, delete the original strategy and copy a new strategy in. Then what you want to do is click save. And after you click save, click add to chart. Now you're going to see the magic happen right in front of your eyes. You're going to see the percentage profit that if you had executed this strategy over the given time frame that you would have executed. And we can see that if you were using this strategy on the 4-hourly chart, you'd be $47,000 in net profit at a 4.72% profit ratio. So sometimes there's issues with the code and you will get error messages. Before I did this video, I was testing out the code and I was getting lots of errors. What you can do in that scenario is enter the errors into ChatGPT and say, hey, ChatGPT, I have an error. This is the code. Paste the error code from TradingView into ChatGPT and it will give you a new code which fixes the errors. Sometimes you need to fix multiple errors, but eventually, if you keep trying, you will get it right. Just in case you do this yourself and you get frustrated, trust me, I've been there, but you know, with a little bit of tweaking on ChatGPT, getting it to fix errors, it can fix it on your behalf. Now let's look at how the Bollinger Band strategy has actually performed so far. We can see that the percentage profitability of trades is only 31.94%, but since it hit some pretty successful trades, the overall net profitability is plus 4.72%. But you can tweak the properties of this strategy if you go back into the Pine editor and edit the variables. So you can tweak this and look at where it succeeded and where it failed to come up with better strategies. But we can see over time, this Bollinger Band strategy is $47,000 net profitable. Now, if we change the time frame, this is going to change the success of the strategy. So we can see on the hourly time frame, it didn't perform as well. Whereas on the 2-hourly time frame, it did perform fairly well. On the 3-hourly time frame, it was even more profitable. And if we go into a higher time frame like the daily, it was even more profitable, netting a 6.77% profit of $67,000. Now, if you were to trade using this strategy on the weekly, you'd be up 30,000. So you can change the time frame to look at how profitable it actually will be. But this is so powerful because what you can now do is use ChatGPT to backtest any strategy, literally any strategy, AMA cross, Bollinger Bands, RSI reversals, any of that stuff, you can now test using ChatGPT. And I want to give you another example using another indicator of exactly how powerful this can be. Now I'm going to try using the stock RSI. I ran a couple scripts for this before. I didn't find any conclusive results, but I'll just do it live for you guys and show you just how easy it is. You can search stochastic RSI from the favorites or the technicals bar. Then you can go into the source code of the stock RSI, click on that. Then you can copy it in. It's already on version 5, which is good, into ChatGPT, and we can ask ChatGPT to make a strategy for the stock RSI. So just like the Bollinger Bands, we pasted in the original source code, define when you want to execute a trade. So just like the last script, we say code strategies for PineScript v5. Now we want to enter along when the stochastic RSI is below 20. So we can see below 20 is here. In fact, we can even tweak this to be below 10 if we want it to be a little bit tighter, and short when the stochastic is above 90. So when the stock RSI hits the upper echelon of the band there, then we can close the long when the short condition is met and close the short when the long condition is met. So we want to ask ChatGPT to write us a code for the stock RSI. In my memory, when I was testing this, I had a few errors, but I'm going to show you how you can fix them if you do come across them. So ChatGPT is going to code in real time. Once again, absolutely crazy that you can do this and create custom trading bots to backtest on TradingView. Just saves so much time of you having to actually code this yourself. Now that you have a bot that can do it, click on copy code, go back into TradingView, click on stock RSI, create a copy of the stock RSI. Then of course, make sure it is in version 5, which it is. We want to go and delete the original code, enter the new code and click save. It does have some issues, as I said before, you can get errors. So we simply just want to copy that, tell ChatGPT that there was an error, fix this error, paste in the error, and it will automatically fix it for you and give you a new code. Now it's complete. We click on copy code in the top right. Then we want to go back into our source code and re-enter the new code and click save. And this time there was no errors. So that is literally how good ChatGPT is, that if there's any errors with the code, you can literally just ask it to fix the error and it will fix it for you. It's absolutely crazy. But when we add this to the chart, we can see the results of the stock RSI, and we can see that on the weekly, it actually lost money. But if you were following it on the 4 hourly, then you would have made money. So it's very interesting to see how different strategies work over different time frames. So if you were using the stock RSI strategy of longing every time the RSI was below 10 and shorting every time it was above 90, then you would be $32,000 in profit based on this sample portfolio if you were doing this on the 4 hourly. If you're doing this on the hourly, it once again became negative. So it's very interesting to look through the different time frames and see over what time frames you're actually profitable. It looks like for both of these strategies, the 3 hour and the 4 hour were the most profitable. And as I mentioned before, you can go in and you can make any adjustments to the variables so you can change things and test different things out. But you can do this for any indicator. I've just shown you how to do it. Now you can go into TradingView yourself and you can enter in your own source code in order for you to test your own strategy. But what I am going to do at the end of this week on the weekend is show you how to integrate this strategy into an exchange so you can actually use them to trade. So I'm going to be doing this on OKX because they allow you to set up a trading bot. So what I want you to do is go into the link in the description, make sure you sign up for an OKX trading account. If you sign up, you can get up to $10,000 in prizes via opening a mystery box. Deposit $50, you get a chance to open a mystery box with prizes up to $10,000, and then you will have an account that is ready to go in terms of trading bots. And as I said, on the weekend, I'm going to show you how to actually integrate trading bots into your exchange so you can take these back-tested strategies and implement them in real time so you can actually start making money. And of course, when it comes to real money, you want to do a lot more back-testing, work out what strategies work out which ones don't. You want to make edits to make them the best they could possibly be. But that is why I'm giving you the rest of the week now to play around with this stuff yourself. So now I've shown you how to do it, how to copy source code into ChatGPT, how to edit that code, how to create a trading bot. You are now going to be able to use the rest of the week to find a strategy that works for you. And then on the weekend, I'll show you how to integrate into OKX, and I'll even show you a personal strategy that I'm going to be using. And then you can actually start trading in real time on a trading bot, which is really, really cool. So link in the description to an OKX account, which is going to give you access to the mystery box and their trading bot function. I also want to remind you, we also have links to Bybit and BitGet as well. They also offer their own trading bot services. So if you already have an OKX account, then you can sign up for Bybit. We also have a $30,000 deposit bonus over there, and BitGet for an $8,000 deposit bonus. And you can also integrate over there if you would like. But on the weekend, that is when I'm going to show you exactly how to do it. So exciting times. I hope you guys enjoyed this video. I think it's very, very cool. I'm going to be testing some more strategies out throughout the week. If you find any strategies that you really like, let me know in the comments below. Obviously, I'm going to share some of mine with you on the weekend, but I think this is a really cool trick to level up your trading game and backtest strategies using AI instead of having to do it yourself manually. Like, I still see people going through charts and looking at when the MACD crosses and working it out and putting it in an Excel sheet. You don't need to do that anymore. We literally have ChatGPT, which can run scripts that you can backtest on TradingView. So it's super, super cool, and I highly recommend giving it a play around this week so on the weekend we can reconvene and hopefully make some money over on OKX. I hope you guys have a lovely day. If you enjoyed this video, smash the thumbs up, hit that notification bell so you don't miss that video on the weekend, and I will see you in the next one. Have a lovely day. Peace out, guys.
Guys, welcome to another episode of Good Morning Crypto. In this episode, we are going to be discussing something very important, namely how we can find undervalued altcoins. Because when you look at the current market cap, it looks quite flat. It looks like nothing happens. You look here at top gainers of the day, you have 10%, 5%, 4%. Look at top losers, it looks like nothing happens. But under the surface, which I will show today, a lot of things are happening. A lot of things are brewing that we have to discuss together today. And at the end of this episode, my goal is that you should know how to look for good undervalued pre-pump coins. We're gonna look at different tools, such as, for example, Morales Money, which we use here. We're gonna look at DeFi Llama. We're gonna look at other tools, all about for you to have an understanding of this ecosystem. Because as this bull market is approaching, as we are exiting the bear market, the number one skill to have in this world, I really think the number one only skill to have in the whole world is to know how to find alts, because the returns on alts are crazy. There is nothing else you can learn that has the same results, that have the same returns, especially when you combine it with the timing of the market, which we are in right now. But all in all, guys, welcome. Smash up the like if you like altcoins. Smash up the like if you like finding new altcoins. And let us know exactly where you are tuning in from this fantastic Sunday morning. Most people are sleeping, but we're here every day. Even Saturday and Sunday, I come live to each and every morning. Guys, welcome in the chat. I do see Crypto Rente, Hunter. I saw Bernard before. Nelson, welcome, guys. So good to see all of you. Princess Pump, Bit Swiss, good to see. And big shout out to Eric Husman for timestamps, as always. Let me take the final sip of coffee before we go into the market. First and foremost, we're gonna look at Bitcoin, and we will conclude that Bitcoin is exactly like it was yesterday, which was exactly like it was the day before, and we're still in this no man's lands waiting for a resolution on Bitcoin. In terms of the market, Bitcoin up 0.2%, BNB up 0.4%. As you can see, it's all flat. But here's where we can start speaking about the meat and potato of this episode. If you go into a tool such as Morales Money, you can just search on Google Morales Money, and then you go, for example, to ETH, and you see which coins are doing well, which coins are gaining experienced buyers. And as you can see, it's many coins, and actually the differences here are quite big. Crypto is still very small, so even if a coin gets, let's say, 2,000 or 1,000 experienced buyers, it is quite a lot. And that's the first tool I want to introduce you to if you're new to it. Of course, if you're watching the channel every day, you know Morales Money. This is something we built ourselves, and basically this is where you can come and you can find coins based on certain filters. So let's say that you want to only see coins where they were minted less than 10 days ago. You select since minted less than 10 and you click apply, and you see this, and you see all kinds of coins. Let's say we only want to see those minted in the last 100 days, but also we don't want just any garbage, because a lot of garbage is minted every day. Then you can also say, by the way, I also want where experienced buyers have increased by at least 100 during that time, during, let's say, this month. And you can click, and now you see some more data, some more signal. What is important is that you can go between chains. So let's say you're interested in Binance and you apply the same filter. This is a whole other ecosystem. So to just jump between ETH and Binance, it is quite different actually, because the numbers on ETH are not the same as on Binance, and we're still working out how to make it better. For example, on ETH, if you have a coin and it has 2,000 experienced buyers, it's a lot, because these are very high quality addresses. These are very high quality transactions, and overall, to make a transaction on ETH, you need to pay a transaction fee, which is quite high in comparison to other chains. Normally, people have more money on ETH per address, but then when you go to Binance, as you can see here, the numbers are just way bigger. So the first lesson when using this tool is that when you go between chains, think about adjusting to upwards when you go to the smaller chains. So you get clearer signals. So on Binance, for example, we would put like 2,000 or something like that in order for us to get clear signal. Also, we did add Arbitrum now. So you can go wild and you can see what's happening on Arbitrum. And Arbitrum, as you know, is now the biggest layer 2. So this is where the second tool I would like to introduce you to. When you're looking at what is big and what is not big, you need to know which ecosystems are taking off. And to do that, there's a good tool called l2bit.com. So you go to l2bit.com and you do see, for example, that Arbitrum is number 1. And then, knowing that, you can go back to Morales Money, and now you know that, okay, this ecosystem of Arbitrum, it means something. It means something. And soon we're going to add Optimism as well to Morales Money, because Optimism is number 2. And so here you do see a bunch of coins. The numbers here are kind of like for ETH. So for example, if you have 2K buyers, it's quite a lot, experienced buyers. Now, something that we're working on to add is the scam detector feature. Because SharkySwap, for example, it's not a good coin, although they have a lot of addresses that qualify as experienced. As you can see, it's kind of a rug pull and their liquidity has gone to 0. And that's coming next week. So if you are using this tool next week, you're gonna see a shield next to each coin where you can see how the liquidity is locked. And then there's going to be a filter here where you can say, give me all coins with experienced buyers, but also where the shield is green, because then it will mean that it's a coin that has a liquidity locked and where the founders cannot rug pull, like we did see during the past days with SharkySwap. So beware, and you can easily check that on DEX tools. We're going to speak about DEX tools very, very soon. In DEX tools, you can enter any address and get security information about them. And we're working on integrating DEX tools into this tool. But for example, number 2 is Camelot token. And this is important for you guys to know because Camelot is one of the biggest dexes on Arbitrum. And the space of Arbitrum is still developing. So we cannot say that it's going for sure be the biggest always. But right now it is quite big. So if you go here to Arbitrum, and you see the different applications, you will see that Uniswap is still the biggest, Radiant, Sushi, this and that. But Camelot is this native DEX because Uniswap is on all chains and it's everywhere. And then you have Arbitrum, which is number 2 when it comes to Camelot number 2 when it comes to DEXs on Arbitrum. You can compare it kind of to PancakeSwap. PancakeSwap on Binance is like their native DEX, and then Uniswap is this cross-chain DEX, which is everywhere when it comes to brand. A lot of this is about brands, by the way. But as you can see, it's important to know what is the alternative to Uniswap on a chain, because it is taking off. And when you know the alternative to Uniswap, chances are it's gonna do at least okay. Then you have Zyber, you have Radiant. So Zyber is also a DEX on Arbitrum, which is community driven, and Radiant is about lending. So all of this is important to keep in mind as you're exploring different ecosystems, which brings me to the next point, to know which ecosystems. Well, one way to know ecosystem is to look at DeFi Llama, but another way to know it is to go and check on CoinGecko, where you can see here, let me share screen, you have all kinds of ecosystems right here, and you can go into categories and you can see them here as well. So for example, you have DEXs, decentralized finance, centralized finance, zero knowledge, this and that. So you can see different sectors very easily. And this is across use case and across chains. And here, for example, you click layer 2, you see all the layer 2 solutions that are doing well. So in terms of narrative, crypto is very narrative driven. So it's important for you to know to click those buttons, because most people, when they come to CoinGecko, they don't click these buttons up here. And it's good to know, because whenever you see a new hype, let's say if Arbitrum starts becoming very, very hot, then you can use Morales Money to see which coins are getting traction, but now you can go to the daily and hourly basis. And here's also where our paid plan is on the lower time frames. But here, for example, you can say, okay, today, like this day, which coin is getting some experienced buyers? And this is important to know because it's all about being ahead. If you know which coin on a daily time frame and also on an hourly time frame, which is even more zoomed in, and soon we're gonna launch even smaller time frames, when they're taking up, that's how we can position ourselves way before everyone else, way before things become hot on CoinGecko, way before things are really starting to pop on all Twitters and websites and so on and so forth. Because that is the biggest alpha that is important to develop your skill in. How can you find coins before they are on CoinGecko and everyone is so excited, and before they have a fire emoji, in CoinGecko? Because I can tell you that when something is up here and is already burning, it's too late. Like it's too late. You're not first. Now thousands, hundreds of thousands of people are looking at this. So that's very, very important. Now, as people say, CoinGecko has a problem, and I don't like it because, I mean, clearly Hex is doing well. Hex is mooning. When you look at our tool, for example, and you look at ETH, you do see that fundamentally, it does have good metrics. Like fundamentally, you look at experienced buyers, it is number 2 on ETH. So, and by the way, ignore these holders. We have an issue here. This holders number is a bit too bearish. If you use this tool like in 2 days or so, this holders is gonna look better. But right now we have some bearish bug here. They're too low in comparison to what they are. But the buyers and experienced buyers are correct. So here you do see that Hex, for example, it has nice metrics fundamentally. And then you go to DEX tools, which is my next tool I want to show you. That is good to have in your arsenal, because let's say you find the coin on Morales Money. You can go to DEX tools, you can enter the address into DEX tools, and here you can see some security information. And this is all, by the way, we're working on how to integrate all of this, but this is important that you know, for example, that the creator of the contract cannot introduce a buy tax or a sell tax. You see, for example, that the coin is mintable, new coins can be created, so that's a negative. You see that all in all, it's a lot of greens and some reds, like for example here, and DEX tools also have their overall score. Of course, you cannot trust it fully, but it gives you an idea, at least. It gives you an idea. So that's important. And instead of CoinGecko, then you could use like CoinPaprika or Nomics in order to see this. And that's a big problem overall in crypto. I can tell you that everyone has their own data. Like the data is different everywhere. So if you go to Paprika, you see Hex being number 7. You go to CoinGecko, you don't see Hex anywhere. And this is true for all kinds of metrics. You go to DeFi Llama, they measure TVL and liquidity in one way. You go to somewhere else, they measure it in a different way. So that's a short overview on some of the key tools. Number 1, Morales Money, to use simple filters to find what's important, to find the signal, and using lower time frames in order to get it first. Next is L2Bit, just to see which ecosystems on top of ETH are doing well, because then you can go to Morales Money, you know which chains to look at here. And then you can look at at DeFi Llama to see what's happening within an ecosystem. So here, for example, we're looking at Arbitrum to understand what the hell is Camelot, because here I can easily see Camelot when I mean, I clearly see that Camelot is getting big, but what is it? Well, it is on Arbitrum. Then you can go here, you can see, okay, Camelot is a DEX. You can go here, you can see how it's growing. You see that TVL is growing very nicely, very, very good. So all in all, it's important to know which side is for what, because there's endless amount of information. And our goal with Morales Money is not to, put all information here, because then this app will not be as good at finding new opportunities. And this is our goal with Morales Money, to find new opportunities and then link to existing resources, like for example DeFi Llama or DEX tools, in order to go deeper, because the level of details you can go in this rabbit hole is quite big. It's quite big. You can really go deep and try to understand as much as possible about a coin and so on and so forth, which of course you should do if you are serious in terms of buying a coin. So we've summarized that. Next, there are some additional bells and whistles that you need to know. So for example, when you look at DEX tools and you scroll down here to the left, you will see additional links that they link to. So for example, honeypot.is is basically that they look at an address at the coin you're looking at and they see if it is a honeypot. Now, what is a honeypot? This is basically that you have the scam airdrops where they try make you go to a website and basically drain your funds in one way or another. Normally this involves phishing. But the exact definition of honeypot on a contract level, that would be interesting to know from you guys in the chat. Maybe you guys know exactly. Let me actually Google it. What is it on the contract level? Because I know that it's good to. Okay, let's check here. What is crypto? A virtual trap to lure attacks so that you can improve security. Well, I mean, honeypot normally in cybersecurity is that you attract hackers or something by creating like a fake thing they can hack, which you catch them with. Let's see. Smart contract honeypots allowed. Anyway, you should avoid honeypots. That's very, very important. And let's see if someone can say in the chat exact definition on a contract level. Next, you can check Token Sniffer, which is another website, which is good to know when you're looking at a coin. And they're gonna give you some additional information here as well. For example, from tokens, I mean, this is the problem now in crypto. There are many websites. Okay, unsellable coins are honeypots. Okay, that makes sense. Unsellable coins. That is true. Sometimes you buy a coin, but they block the transfer function, so you cannot sell it. So there you go. That's on a contract level. Thanks for that. So Token Sniffer is another website you can see, which gives you a summary of all the stuff about the coin, and they link additionally to Bubble Map. And Bubble Map is another tool which many websites integrate, and maybe we're gonna integrate it as well, depending on if it helps us to discover. Let's see. Bubble Map, let me find just another website for it, because it's Bubble Map. It's a standalone website also. And some try to integrate it, and Bubble Map Web 3. I actually spoke with the founders the other day about, or is it Bubble Maps? Probably Bubble Maps. The problem with Bubble Map is that for me personally, it's just like interesting stuff this far. I'm still trying to understand exactly how I can use it in order to make money in the market. But you can enter an address here, for example, hex, okay? And then you're gonna see this bubble map of the different entities, like the different addresses. Like here you have the sacrifice, Pulse X sacrifice address, which has a bunch of coins. Here you have some other wallet, and then you have a bunch of smaller ones. So this gives you a perspective on which contracts or which wallets hold how much addresses, how many coins. And I guess you could make some conclusions on that. But personally, I'm not using this a lot right now. And the reason is because it's not very actionable. Like, I'm trying to understand more how to... It's interesting from an investigatory perspective. When a hack happens or something, you can follow step by step what they did. But in terms of coins that pump, sometimes coin pump and they have a few holders that have a lot of coins. Sometimes not. So I have myself not found a nice way to correlate the pumpamentals and like which addresses hold what. As long as the market is interested, as long as experienced buyers are buying, as long as we do see market action, it can still be okay. And also on top of that, all of the security stuff that we're gonna integrate. But it's up to you. I would recommend you to at least try. Maybe you're the kind of person that will, see a bubble map and you're gonna know exactly how to apply it, and you're gonna develop your own strategy. Because at the end of the day, I'm showing you all these tools. It's up to you to develop your own strategy. How do you take this information and what do you do with it? Because there are so many different ways to play it. There's so many different ways to play it. And that's the best thing with crypto. You can start with something simple, like Morales money, and simple filters. But then the way you combine filters, the timeframes you look at, the chains you look at, the additional informational resources you look at, the risk you take. Maybe you are okay with buying a coin before it has all the security certifications, because that's going to be interesting when we integrate the security metrics, this shield basically, how quickly new coins are gonna be indexed, because we're gonna use a third-party provider to do that. And I can imagine it's not instant, but maybe, let's see. So this risk factor is another one. Are you okay with aping into coins that have not even passed security yet or not? So I hope that gives you some overview on how to play this upcoming bull market. And now I want to invite our good friend Alfred the Ape, also our co-host, by the way, for this next section of the episode, which is going to be about EVM, which is going to be about the future of programming. And this is something we touch upon now and then on this channel, the fact that will EVM be big in the future? It is for sure big right now. It's very difficult to replace, but that's our next topic. Before we go into there, I want to give a shout out to our partner number one, which is Bybit. You find the link below. You can, if you use the link below and you deposit and you do KYC, you get a nice big fat bonus. You can go long, you can go short, you can trade Bitcoin when it goes up or down and make money in all directions if you're careful. You can trade spot. Everything is available on Bybit using the link below, and also Tap app, which is our other partner, where you can buy crypto, sell crypto, use a nice MasterCard, also using the link below. And also for Tap, we have the code for signing up. The QR code is called QR code. So thanks a lot to Bybit and Tap. On that note, we're switching gears a bit from the altcoin situation to what is happening on the dev front. And I found an interesting tweet from a guy who was at ETH Denver, which, by the way, I agree with, because this industry is so young that most people don't know what the hell they're doing. And I mean, we do see it a lot with us, where you know, in Morales, sometimes our competition, they just like blatantly copy our website. It's so funny. And by the way, we have good connection with them. We even work on some things together. But uh, let me show you. Let me show. I mean, no one knows what the hell they're doing. I can tell you that, because this guy was on ETH Denver, and everyone is saying we are the ultimate Web3 infrastructure platform, and it is true, because I mean, we write that at Morales, not anymore, but when we were new, we wrote that, you know, we're the ultimate Web3 infra, this and that. Now we're more focused on the use cases and on what you exactly actually you can do, what kind of benefit exactly actually you can do, but. Everyone else is still like in this ultimate Web3 infra platform. Of course, then you have other companies, projects that do, let's say, bridges, and they say we're best endless cross chain, or we're the first. This is the latest one. Everyone is the first ZK EVM, or everyone is #1 development platform. I mean, we also had that on our website in the past. We don't anymore because we focus on use case now. But I see this a lot, and mostly it is because people don't know what the hell they're doing. So they just put we're the best. We just started like last week, but we're the best already. Every company is onboarding $1 billion to Web3. That's also true. You see it every time. You know, we have the tech, we have this, we have that. We're onboarding the next $1 billion. ZK to protect identity. Everyone is the best self-custodial wallet for DeFi. Everyone is building the best easy-to-use APIs. Everyone is building the best community for devs. Everyone has the best aggregator of DAOs. So yeah, man, it's funny. I think this is a sign of an early industry, because everyone is like, we're the best. This industry is so young, so we can kind of credibly say we're the best. So why are we discussing this? Well, because to me it's a good sign, because this is a sign where you and I can make a big difference in such an industry, where it's up for us to form. It's up for us to mold it into what we want, because I can tell you, even the biggest players in the space, they don't know what the hell they're doing, which we got confirmation for when one of other API providers just copied our website, just copied our wording, because we had build, scale, learn, and then we opened up just another and they also had exactly the same thing. And I mean, we do have good relationship with them, but it just shows that they probably don't know, like, when you copy, you don't have your own voice. And to be fair, we've also copied others when we started, because when you start, you just try to imitate. And this is an interesting perspective that it's new. Like, I see that it is everything is up and coming. Everything is still the early days. All the like layer 1, layer 2s, all the bridges, ZK EVM, we're still figuring things out. We are like in high school, you know. We're like in high school where no one has their true identity yet fully. Everyone is still, you know, trying to copy, trying to fit in. And that's, yeah, I mean, that's a very good place to be from the career perspective, from the business perspective, because everything is early. I love that. All the altcoins you see now, they're early. Like, everything is early. EVM, the whole system of EVM, although it is big, it's also very early. Because the architecture is not perfect. Like, there are so many problems with EVM, but it's still the biggest now. Some problems here, for example, no parallelization, hard to prove, unnecessary big words. I found someone else writing a good thing here that I agree on, and that's bad standards. Like, ERC20 standard, it is not good. It's very bad, actually, because in ERC20, I can create a coin, I can airdrop it to you, and then I can make it look like you send that coin to someone else. It happens every day with Vitalik's address. People airdrop him their coin that they just built, and then they like publish logs on the blockchain that trick all indexers to think that Vitalik moves the coins, but he doesn't. So this is one example where, like, it's just a program that everyone writes, and the standard is just not great. It is like, from the tech perspective, we have always two perspectives to all matters in technology. Number one is the dev perspective. So from a dev perspective, it's not great. Number two is just adoption and product perspective. And from a product perspective, obviously, ERC20 is the biggest standard. It has definitely succeeded. And from that point, it's fantastic. But from a dev perspective, it's very bad. I mean, another bad thing is that balances in an ERC20 coin can change without any transactions. So when you think about the coin, like normal money, you need to receive funds in order for your balance to increase, and you need to send funds in order for your balance to decrease. Well, in ERC20, that doesn't have to be true. You can just put random number as your balance or a formula. And it does open some innovation, but also it also makes it very difficult to work with, because let's say you're building an accounting tool, and you've built it in a way where, you know, money comes in, money comes out, and then suddenly the Ethereum ecosystem invents rebase tokens. And rebase tokens, they can change their balances without any transactions. They just change them based on what's supply and this and that. And I mean, it's innovation. It's nice that you can be flexible, but also it makes it very difficult to work with, where now you always need to keep in mind that, by the way, the balance can change without any transaction. The balance can be a formula, which, by the way, has some interesting use cases, although it's pain in the ass that it is like that you have so many things to think about. A good use case of the balance being a formula is a superfluid, where basically because the only thing you need to implement is a function for your balance, you can say that, okay, each block decrease the balance and increase balance in some other user. And this way you can stream money every second with a very nice, simple approach. And we have a interview with these guys, Superfluid. I think they're doing a good job. But so we have this gives innovation, but also it kind of makes it so difficult. It makes it very difficult. It makes it super difficult, yeah. So maybe it can be solved by just having another layer on top, which makes it easy, but yeah. So that's how EVM looks right now. And then you have so EVM basically it's very low level in the terms that you can do anything. It's very customizable. It's very up for the dev to figure things out, and they can do anything. And sometimes we end up with a bit weird things. But then you have another approach, which is Radix, which you know we follow a lot, where they're creating standards. They're creating standards for everything. For example, you want a token, here's a token. Here's a template for a token. It works like this, so you can get going. You want a DEX, here's a DEX. So it's more this high level thinking. It's not as you know, like in ERC20 where everyone rolls their own solution, but it's more standardized, more templatized. So I think that this year we're also gonna see this battle between standardized, templatized, more like thought through, where the developers of an L1 like Radix, they think through the entire experience. They think more end to end, both when it comes from starting from the wallet down to the consensus, and how can we make a nice like end-to-end experience, versus EVM, which is the biggest. It is incumbent. It has massive, like insane network effect. So we're gonna see what's gonna happen. But that's something to look out for, because like we discussed, I think yesterday, that if it is the case that something like Radix can ensure that any dev can quickly build DeFi without worrying about security that much, because it's all built in, because it's templatized, because it's very difficult to mess up. If that can create like a 10x bigger wave of apps, 10x bigger wave of new things people try, because they're more confident to try, because they're not worried to get wrecked by some security flaw, because the system is more templatized. I mean, what I'm trying to reason to come up with some analogy. Maybe you can say that EVM is like when you code without an operating system. You can mess up memory. You can have like memory leaks between applications. It's not really like that, but I'm just trying to give you some perspective on basically having a very flexible programming layer where you can shoot yourself in the foot in 5 seconds and lose the entire foot. And then with time, so we went from just, you know, coding on top of the hardware. Now we have operating system, which, for example, ensures that memory from one application cannot be read by another application, because that's a problem. Let's say that Chrome can read the memory from your secret chat app, Telegram chat app, because I mean, technically it is in the RAM. Both of them, both Chrome and your secret Telegram chat with the secret stuff, it is in the RAM. So, but operating system ensures that Chrome cannot just, you know, open up the information that you have in memory from something secret. So operating system basically gives all of this like security guarantees because it's more templatized. You have an app. What is an app? This is an app. What is a process? What is a thread? This is a thread. While, I mean, technically you could go nuts and program on top of the CPU yourself, and you're gonna have endless flexibility and endless shooting in the foot flexibility as well. So yeah, I mean, this is and of course you need the right balance, because if you have too high level, too standardized, okay, then there is no innovation. So you need the right balance. Let's see. But that's interesting for me from a dev perspective, how this industry is gonna evolve in that sense. Okay, guys, that's it from the main topics. Finally, what else? Yeah, I mean, I think we captured the zeitgeist. In each video, I want to ensure that whatever happens today, we know about. Whatever happened during the past 24 hours, we have communicated. And to be fair, nothing has happened in the last 24 hours in terms of something big, you know, something big. And instead we focused on alts. We covered what's happening. I mean, the only big things that are happening is under the surface. It is in Morales Money. I mean, here you can see that big things are happening, because if I look at one day experienced buyers on Arbitrum, I mean, there are some coins that are getting it. So, I mean, this is quite big. Like if a new coin gets 200 experienced buyers. And so to summarize, we have Zyber here. Zyber is a DEX on Arbitrum, community driven. The innovation is that it's cross-chain. It has cross-chain swaps powered by Axelar and Squid Router, and plus other stuff a normal DEX does. See, I mean, the thing is, Morales Money, which we built ourselves, it actually, I mean, it opens up my mind like never before, because there are so many new things I learned here that I would never learn otherwise, that actually my team is helping me to understand everything. So I have like a cheat sheet here with all the stuff that are new because it's like too much. Like every day there is something new I don't know about in Morales Money, and I love it, because otherwise I would see it only on CoinGecko when they're big already. So yeah, now I taught you about Zyber token. So it's a DEX on Arbitrum. Let's see, Cortex, we don't have information on that from my cheat sheet. JPEG, I mean, what is this? I mean, it looks, man, what is this JPEG? It could be a scam. Be careful, guys. So see, before we have integrated the scam features into our own app, you copy the address, you go to DEX tools, you paste it here, and let's see, JPEG, this JPEG, and you look, yeah, see, this is a warning. This token appears to be unsellable. This is a honeypot, basically, like we discussed. This is a honeypot. So beware. This is, I mean, we really need that shield feature in the UI as soon as possible. Let's see, do they have token sniffer? Token not found. Okay. Yeah, shield feature coming next week. Yeah, guys, that's basically it for today. So let's go to Q&A. We're gonna have a nice musical break, just brief, so I can recharge, and then we'll be back to Q&A. If you are watching on YouTube, be sure to do the algorithm. Like, subscribe, bell button, all. Like, subscribe, bell button, all. This is the best thing with the chat. You guys bring up stuff that we otherwise would miss. Let me bring this to your attention. So it is true that we have some drama happening behind the scenes also. So while Morales Money can show you what's happening in terms of buyers and stuff like that, there's also some legal drama happening right now. So apparently, this is just rumors, but the Bankless guys reported that wealth notices have been sent out by the SEC to the teams of major DeFi protocols, notifying them of the intention to file security law charges as per Bankless. So, Bankless podcast reporting on this. This is going to be interesting to follow, and I know that something is definitely happening, because Richard Hart has been working very hard to scrub himself fully clean of all staking, everything that has to do with staking. So he basically said that it's no longer called staking. It's no longer called staking. It's gonna be called something else. Let's see. The Bankless guys tweeted that he was wrong. Okay, maybe he was wrong. Let's update, because I know that video became big. Let's see if they tweeted that. So it's FUD or no FUD? JDPS. Link the tweet so we can clarify it, because it is true that that video has been sent to me from many different directions. And yeah, maybe it's just made up. Okay. Okay, I think he just said something wrong here. He's saying update on Wells notice statements. I checked with my source and have some clarification. I said that many Wells notices. Okay, the weak part is incorrect. The time frame is okay. So basically, ignore. Yeah, I think they said something. Although my sources did say Lido after checking with other sources, it seems that okay. I think they just said something without verifying too much, but you can read here yourself. There have been apparent rumors after checking. Are announced. This apparently caught. I don't know, guys. So we're just gonna leave it because it seems to be unverified, unlicensed alpha. And we need licensed alpha. Yeah, but this thing is bro science, and we don't want that. Something new on Tether. There's still. Yeah, it's still Tether drama. We covered it yesterday. So yeah, let's go to Q&A, guys. Let's go. But yeah, I mean, probably the truth is somewhere in the middle. Probably they have gotten something. Probably not as dramatic. Probably not in the during the course of 1 week. Probably a bit longer. But yeah, I mean, I'm sure that something is happening because SEC is making moves 100%. And if we look at Richard Hart, he actually now is removing all staking. There's no in terms of words. Instead, he's saying that it's publishing. It's not staking. It is. Look here. You're publishing. Okay. Creating new hacks should be called publishing. They only come to exist when you've spoken them into existence by communicating to the whole world on a public immutable blockchain. You made the number, you did the math, you spoke the words. You created value from knowledge and time. So it's no longer staking, guys, it's publishing because you publish yourself without work of others and without expectation of return. You're a publisher. I think that the discussion here, I mean, Richard brings some interesting points to discussion where I don't fully agree with him, but I still think that that reasoning is interesting. I thought that, let's see if I can find that. Here. Okay. This tweet is interesting. So write down the number, no tax. So let's say you pick up a pen and paper, you write down the number, okay? You don't get tax for that. You do some math. 2 plus 2, 3 plus 3, 3 plus 3, 5 times 5. Do I need to pay tax? No tax. Okay, good. You can publish it on the web. So let's say I do some math. 5 plus 5, 3 times 3, and I publish the results on the web. Do I get taxed? I don't get taxed. Okay. Now, if you call what I just did Bitcoin mining, you get taxed. You get taxed. Okay. Why is it so? Because when you do Bitcoin mining, you publish a number online. Basically, when you mine Bitcoin, you need to find the random number that satisfies certain criteria. We don't have to go into the details. We have a full course on this, by the way, how Bitcoin mining works on Morales Academy. I think you should take it if you haven't, because I mean, this course, it has changed many lives because people finally understand the crypto. Let's see, which one is it? It's crypto Ethereum fund. Is it? It's not Ethereum fundamentals though. Learn all courses. Let me find you the exact one. Fundamentals. Blockchain and Bitcoin fundamentals. I mean, this is the one. In here we have some basics, and then here you should read about hash functions, this and that. And yeah, somewhere here I think we discuss it, like transaction outputs, mempool, exactly, mining and proof of work, math behind proof of work, you get some homeworks. So yeah, go check out this course if you really want to understand it. But basically, to summarize it, when you do mining, you need to find a number, random number. So this is why we have all of this, you know, miners just guessing random number. And it needs to satisfy certain criteria. And if it does, then you get rewarded. And this is what he says, that, you know, you do some math, you publish a number, this number satisfies some criteria. It is just a number that you do. And is called Bitcoin mining, and you get taxed. Okay, so here is where the meat space, humans, you and I, the meat, and the tech space meet, because technically it's just a number, but practically you have a machine that does some work and you get paid for it. So that's practically. Technically, you just publish a number. Practically, you do work and you get paid for it by a network. Now, there are some interesting debates to be had here. So I don't agree that it's just publishing a number. It's not like that. It's not that, because there's practicalities to it. And practically, you put your machine into electricity, it does some stuff, and the law is about practicality, like Sig 0x says. Yes. But I think that Bitcoin mining, because right now when you mine Bitcoin, you get taxed when you receive the Bitcoin as income, okay? I don't think that's good, because I think also Richard or someone wrote another interesting thought on Twitter where, let's say I grow an apple, okay? I grow an apple. I take the apple from the tree. I'm not taxed on that. I am taxed if I sell the apple, okay? Then I'm taxed. So Bitcoin in that sense to me is more like growing apples, okay? You do some work, some preparation, some equipment, just like Apple, you have to water the plant, and you get rewarded with fruits of your labor, Apple or precious Bitcoins. That makes sense to me, because then it is like other things that you get from nowhere, okay? Like if I do work for you, I get paid from you, okay? I'm selling you some service, you pay me for my service. When I mine Bitcoin, those Bitcoins are coming out of nowhere from inflation. Like they're not coming from someone who buys my service. They're coming like apples who also come out of nowhere. I create them, okay? I'm the publisher, I publish, okay? So that's a taxation method that would make more sense to me, that it's still practical, because look, it's not practical if you just say, oh, it's math, I'm doing math, why are you taxing me for math? I don't think that makes sense. Like you're not taxed for math, because I mean clearly it is more like growing an apple. But I mean I love this, like people now are overall in this industry, we are getting out of control when it comes to securities, because when you think about it, everything is a security. Like BitBoy, was he talking about Chuck E. Cheese or Windex or something? So BitBoy was saying the other day that he thinks that Chuck E. Cheese, or was it Windex? Yes, I don't remember. I think it was Windex. So Windex is a security, because you can go to Walmart, you buy Windex with expectation of profit. You resell Windex on eBay, and due to work of others, aka eBay, and maybe Windex, the company who made the Windex, and maybe they push updates to it or something, I don't know, you expect a profit. You expect a profit. What the hell? It's a security. Or let's say, this was more in the past, but let's say in the past, I buy a video game on a CD. I expect profit from the work of others, because the guys that do the game, they will push updates to the game. So it's work of others, and I can resell it for a profit in the future. It's security. Or airplane miles or hotel token. I get hotel token. I buy hotel night. I spend money with expectation of profit because I get hotel token. This is loyalty point, okay? So with expectations of profit, or I expect something. Profit can be monetary profit, but it can also be leisure. Like, you know, when it comes to payment, you can pay me in money or you can pay me in something else. Maybe you can pay me as a vacation, because that can be pretty expensive. So I get those loyalty points with expectations of them. Maybe they're gonna be worth more in the future. They expand the hotel chain. I mean, you get the point. You get a job as a waiter. You invest your time, work with expectations of profit, pay from the work of others. Boss, cook, cashier. You pay for school, invest with expectation you'll get a better job, profit from the work of others. Teachers, employers. Is life a security? You're born, work with expectations of profit. Milk. From the work of others. You invest in a painter, pay to paint your house, work of others. He buys paint a home at a Home Depot, common pool. Common pool of investment, man, definitely security. You expect profit on it. He advertises in the newspaper. You're willing to pretend that anything is anything else, then everything is everything. You invest in a short common pool with the expectations that the government will disparage your industry, work of others, which will make the price go down and profit you're short. You vote, invest time for the people who elect work. What the hell? But you get the point. Where do you complain if the officials aren't funding hard enough to make your short profitable? Oh, exactly. You short something that you want the government to wreck, and yeah, where do you complain if they're not wrecking it enough? School, restaurant, with critical managerial and entrepreneurial effort. According to the SEC, the whole world is security, but not Bitcoin. They clarified that Bitcoin is not a security. That's correct. Does that mean that tops... Oh, let's listen to this guy. He's funny normally. Let's listen what he says. He's the guy who says that the SEC is protecting us against the profits of airdrops because we're irresponsible. I love this guy, Gabriel, or what's his name? Wait.
Not everything is a fucking security, asshole. Just because you put not everything is a fucking security, asshole. Just because you put a fucking digital card on the blockchain and people buy it because they want to speculate, does that make it a security? Your ass is a security. This house is a fucking security. That snow over there, security. Not every.
I mean, it's true. What the hell? Like, let people trade stuff on the blockchain. Like, they wanna trade stuff on the blockchain. Okay? It can be Pokemon, digital Pokemon. It can be some kind of collectible. Maybe it's a token. Listen, people love this. People love trading this. So the good thing is that you cannot put this genie back into it. Like, it's too good. Like, this industry is too good.
Degens, as you go to bed tonight.
Let's see. Does he have some more funny stuff?
Maybe.
I mean,
maybe this isn't going quite.
I don't know if it's family friendly.
Way
what he does here, actually.
That you thought.
Excuse.
It would be fun if someone you talk to through hacks what happened. Oh yeah. So Rec News is very good. So it would be fun if sometime you could talk us through the hacks that happened. Well, I mean, Rec News is very good on that, and normally hacks evolve. Like, normally you have some new innovation. That's when we cover it. Like, when flash loans became a new thing, that's when we covered a lot. But now it's a lot of like the same kind of stuff. They forget some checking of internal structure, this and that. But yeah, I mean, if there's an interesting hack, we will cover it. My grandson watches. Yeah, it's Gabriel. It's too much for grandson. I think so. Yeah. Ivan did that few times back. In early DeFi days. Yeah, and we also, by the way, recreated a lot of hacks on this channel, like the basic ones when it comes to reentrancy and stuff like that. But let me show you another course, because we have a full course on that, believe it or not. Security, Ethereum smart contract security. I mean, the reason why I don't want to cover this a lot, because like it's quite technical, and if I'm to do this on the stream, it's gonna bore a lot of people. But if you want to check yourself, like we have a full course on that. overflow vulnerability, hyperinflation, you know, all kinds of stuff. DAO hack, parity hack. So yeah, how to mess up with the contract by upgrading it, stuff like that. Academy.morales.io is the place. Hey Ivan, could you implement a search engine that allows you to search for a token that you already know and find all information that's provided regarding liquidity? Yes, well, that is coming, guys. We will have a token page in Morales Money where you can open up a token and see like a token informational page. Because I mean, from the start, I thought that we can just link to external resources, which we can. But also, I want to have a community perspective to it. So basically that, let's say you have a coin and you want to leave a comment or something. You can do that. Or something else where we can get this, you know, knowledge base shared. Because a lot of people are using Morales Money, especially since we launched it, because it's really helping a lot. But wouldn't it be nice if we could, for example, help each other to avoid scams, where we can quickly mark it as a scam or stuff like that? So this is why it could make sense with the token page, let's say. How about the team rating? Yeah, I mean, when it comes to team rating, probably this will require manual checking. And we're more focused on the algorithm itself. So we can do anything that is you can code. But that's why maybe if we have a token page people can click, then you can rate yourself. And we can have this hive mind when it comes to finding coins and rating them. Absolutely. And yeah, I think that will make sense. It's a very, very important algorithm. exactly. Any thoughts on image AI? No thoughts. Look at the current state, because I don't know it. Are you earning now some money from trading? Yeah, I mean, that's why we built the Token Explorer, to find altcoins easily. Because as you remember, this channel really started from a development perspective in 2017. But then when DeFi came, we went all in DeFi. We went all in DeFi, new coins, finding hidden gems. So this is the value of this channel, because we actually do this by hand. Like, we actually trade this. We are creating tools because we know what is needed. Because we ourselves, my team and I, are in this market. So absolutely. And that's why when I'm saying that the big opportunity is altcoins, I know it by experience, by first experience. Starting to take the whole computation off chain and verifies on L1. Kind of like ZK Sync, I guess. I mean, the problem with Starknet, I think, is that it's not EVM. EVM is like another language, which, and it can be okay, but it's how big is it? Let's see. I mean, see, this is, what is this? I mean, you can be non-EVM with another language if you have a community that really loves you. But total value locked is small. Activity, yeah, I mean, like, activity, I guess, is going. I know some games are building on it, like So Rare or something like that. But I mean, for me, I'm very pragmatic. I'm very pragmatic. If they start gaining traction, yes, I think that at 8, I mean, if you believe in it at this price levels, it could obviously be a very good investment. But do they have a coin or no coin? But for me, it's a bit too early, because listen, I know how difficult it is to onboard devs. And if you are struggling, because they're not new. They're not new. They don't have a coin. Okay. But they're also not new. They've been around for quite some time. And I mean, many projects that launched like recently have this. So anyway, I'm optimistic on all innovation. Let's see what happens. But this is too early for me. I would like to see if this would be EVM, it would be different because then I know it's gonna be easy to onboard. But this is like their own language. What is this language called? Oh, let me follow these guys. Well, what is their language? Some other language anyway. Let's check. But not airdropped. Okay, okay, so they're gonna have some coin. Yeah, I mean, definitely. Listen, if you love this, if you believe this at this stage, it could be a good deal. If the coin is but look here, this is way more than. See, I mean, this is good. Why isn't L2? I mean, is this their L1 or am I looking at the wrong thing? Let's go to L2 bit is not showing them correctly, maybe. Where do they get this number? Because, I mean, this number is good. Cairo, exactly, Cairo. Anyway, this is good. I mean, 500, this is very good. Then they would be, if this is correct number, then they would be number 3. So that changes everything completely. Yeah. Starkware, Starknet, StarkX. Starknet is still small. But why do they say they have 500? Where is that? Is it StarkX? Where do they have this money? Is it their foundation that has all of it and like the market has only 6, 8, 7 million? Anyway, I'll check it out more. You can build giant dApps. You can build giant dApps to get them verified. Yeah, anyway. The difference between optimism and arbitration. Well, there are some technical differences. From a user perspective, the differences are non-existent. It's a very small difference. Then you have technical differences, which you can see here on L2 bit. When it comes to like if you see here, for example, what is deployed, what is not deployed. So both of them have fraud proofs, not fully done. But from a user perspective, like you don't really see a lot of the difference. Let's see, in terms of risk, it's some differences as well. Arbitrum is a bit more mature, looking on the big picture. Yeah, but they're very similar. They're super similar. But yeah, guys, I don't know if you guys can tell me where I can see this in some other tool than the website. Across StarkX platforms, it powers platforms DYDX. Okay, I see. This was a good explanation. Because DYDX, these guys are built on top of Starkware, right? Okay, I think I understand that, yeah. Immutable, Sorare. Okay, I understand. So is it kind of like Cosmos then? Because the problem Cosmos has is that you have all of these apps building on top of them, and then the Cosmos holders don't get anything. Like everyone is buying the coin of the app. Anyway, I mean, obviously, this is I'm not super at home with this when it comes to having full insight in the ecosystem. So you probably know more about Starkware if you're into their ecosystem. I'm still a noob, you can say. But listen, you have sparked my interest in getting more into it. ZK-AVM is holy grail. Yeah, I do agree with that. That's why ZK Sync is going to be interesting, and other such ZK-AVMs, Polygon ZK, and so forth. Will ZK win in the end over optimistic? Yeah, I think so, because it is a no-brainer. Like ZK is just better. It's already verified, mathematically proven. And that's why Arbitrum and Optimism probably gonna go to ZK as well. Now they're optimistic. Let's see, more possible frame to invest on daily basis. What's the best bet to invest to choose right one, or how much is just enough to invest to minimize risk given the token when we really talk? Okay, so some question about how much to invest and in what. I mean, obviously this is very personal. What you yeah, I mean, and by the way, guys, no need to repose the same question. I just saw the same one again. So it's very personal, like how much you invest in what. You can have a pool of 10 coins that you pick, and you see how they evolve and the progress. But it's all about risk tolerance, time horizon, and so on and so forth. So we could do some feature when it comes to portfolio composition. That's like another topic. How do you compose a portfolio? And what would be the best way to do a portfolio? That's yeah, I wonder if we need to build that, or if there are some tools for that, because that's the ever-coming question. Like, how much should I fob ape in? Should I ape in with 50% of the capital? But also, it's impossible to answer, because that's why it's you always say, you know, your risk tolerance is not my risk tolerance. Your time horizon is not my time horizon. And I understand that it's an interesting question to dig deeper into, but I just don't see a universal answer yet. And there is probably no universal answer. But it's interesting to model it. Let's say you split it up in 10, you take profit whenever something pumps at least 50%. That way you can model it, versus let's say you split up in only 2, like what is the risk reward, or in 20. So yeah, but that's the ever coming question, like how much to FOMO into each coin, and how much to wait. There's other coins that are pumping. So for now, it is up to you, and we're gonna see when we will add more features. Sig0x is saying, I have a digital portfolio. When I see a super low market cap coin, I can throw few $100 and just forget about it. The goal is to do at least 10 to 100x. I mean, that's one way of doing that for sure. And yeah, let me know, guys, in the comment section how you're doing it, so we can share the wisdom. Because again, it's so personal. It's very personal how you do it versus how I do it versus how someone else does it. On that note, guys, I think we're gonna cut it here. Thanks a lot for great stream yet again. Great questions, great insights. I learned something, you learned something. That's the best, when we have an exchange of alpha happening. That's exactly how we want it. So thanks a lot. We're gonna be back tomorrow at 8 a.m. Big shout out to Eric Husman for doing the timestamps as always. Smash a like if you're watching on YouTube. Have a good day. Enjoy your Sunday, and goodbye, guys. Goodbye.
deviation. So the last time I looked at AVAX, I was looking at this break-in market structure here, where we, I'd put in this higher high, higher low, higher high, and then we had broken that last higher low. And, at that time we were up here potentially putting in a lower high to begin a downtrend on this 12-hour structure. And since then we have come down and lost the point of control of this range. And we are actually approaching this key level that I was looking at, the golden pocket and the value area low, also a very key support resistance flip, which it's very interesting how quickly we're approaching this. I was kind of speculating that since that level had so many similarities to the key levels inside of Bitcoin's larger range, basically I was targeting the golden pocket confluence with the value area low on Bitcoin as well, and with some other altcoins. There's a lot of similarities. Pretty much they all have this area of inefficient price action and a key support resistance flip around the value area low and golden pocket. But AVAX is approaching that level a lot quicker than Bitcoin is. And I mean, you can see that Bitcoin right now is only down about 11%, maybe 12% from its highs. And in order to get to that, key area, it'd be about a 25% drop from those highs. And AVAX has pretty much already gotten that 25% drop from those highs. Now, AVAX is in a slightly different position than Bitcoin because AVAX has broken this 12-hour market structure. It is, technically in a downtrend right now, but Bitcoin did not. We are still in an uptrend here until we break these last significant lows. We are still technically in an uptrend here, and we have the potential to put in a higher low somewhere and maybe then, a higher high. So since AVAX is so close to this key level, given the circumstances and where Bitcoin is at as well, there are a few scenarios I'm looking at. And number one would be that we, see a move down to this key level. We retest this value area low, key support resistance flip where we had, very nice wicks off this level previously. And that would be, about a 10% move to the downside from current prices. And maybe Bitcoin can see a move to the downside and maybe still put in a higher low, or maybe we come down and SFP these lows, which you could say if we SFP these lows, we would then be targeting these highs. That's the way some people look at it. And since AVAX has been moving faster than Bitcoin, at least percentage-wise, it's had a 25% drop, whereas Bitcoin only had like a 12% drop. Maybe if AVAX drops like 10% and Bitcoin only drops like 5%, we may see these two instances line up at the same time, where Bitcoin either comes down to this key level or to some of these wicks for potential swing failure patterns as AVAX is approaching that value area low. And then if Bitcoin starts bouncing from there, we may see AVAX get a significant bounce off that level, but really it does depend on what Bitcoin is doing. If Bitcoin is going to lose that low and we're going to start a downtrend for Bitcoin, then I think it's very likely we will lose this value area low and then, at some point probably come down and take out the lows, potentially go on to put in lower lows. Maybe we SFP the lows, maybe we see another large drop here. But I have been saying that I think it is very likely that Bitcoin does end up going for the highs again before we start this retracement. At least that's what I was thinking before we got this dump on Thursday or whatever day it was. I don't even remember. I was looking at us maybe coming back up into this range and going for the highs, but then Asia absolutely dumped us down on Thursday. And since then, we've really been doing nothing for Bitcoin. We've just been ranging down here. So it's hard to say what's going to happen with Bitcoin. but I would find it very interesting if we could get a move down to this key area for AVAX and maybe see Bitcoin put in a higher low, maybe start to look a little bullish. You know, that could make for a decent trade here on AVAX. You know, I like the golden pocket here, but I really would like to see a test off this value area low, just considering the near perfect taps of support and resistance we've had on this level. And overall for AVAX, that value area low is very key. We do have that 786 and previous range point of control below there, but I have a feeling that if we're going to lose this value area low and make our way back into this range that we traded in down here, there's a good chance that we may end up coming down for the lows. You know, this was like a nice deviation of the range. We got back into it. So, you know, if you're bullish on AVAX, you would really like to see it hold this value area low. Not saying that we can't lose it, bounce off this level, and then come back in the range, but it would look a lot nicer if we held this value area low as support now. And yeah, you know, if Bitcoin is putting in a higher low, if things are looking bullish as we test off this, I mean, depending on, you know, your entry and all that, you could get a nice risk reward just targeting the point of control. And then, you know, maybe we could see this thing run. You know, there's still the potential that Bitcoin eventually breaks out of the range to the upside. In that case, you know, alts would be ripping as well. And I mean, we are in a downtrend right now for AVAX. It would be very tough to, you know, look for a break in market structure here because we'd have to come all the way up to this high. But if we start retracing to the upside a little bit, put in another lower high, that could, you know, make it a little bit easier for market structure. You know, maybe we look to put in a lower high at this point of control, support resistance, flip there, and then, you know, we could look for a break in market structure like that. You know, I'm really just brainstorming here. Mainly it depends on what Bitcoin is doing. So, you know, I'm looking at this scenario, assuming that Bitcoin is going to be bullish and it's not going to break that last swing low. But if it does, I think it is a completely different story. And, you know, I gotta say, I am a little salty that I did not trust my TA here, that I didn't take this trade off of this NDPOC, because this ended up, you know, being the swing top. This ended up being a great move here. So, you know, for those people that did short this NDPOC, congratulations on that. I was personally looking for an SFP into that golden pocket, but, you know, I ended up missing the train on that one. But now I got alerts set down below, so if we see a move down into this zone, I'll check AVAX, I'll check Bitcoin, and we'll take it from there. Okay, well, thank you guys for watching the video. If you enjoyed, please consider leaving a like and subscribing. Really appreciate the support, and I'll see you all in my next one.
Hello everybody and welcome to another amazing video of DIY investing. Bitcoin and the rest of the altcoins are seeing downside. This is what I talked about in my last couple videos, analyzing why I believe that we're most likely going to be in for a deeper correction and how to go about profiting off that correction when it happens. For today's video, I'm going to be brushing up on some of the same points. We're going to go into a deep dive of the shorter time frames of Bitcoin and Ethereum so that we know exactly how to play this next correction that's coming. And then I'm going to be finishing it up by talking about one of the very best performing altcoins over the last couple months that's up over 2.5x since I gave the word about it just a few months ago. Thank you guys so much for tuning in, and with that being said, let's jump right into it today. Alrighty guys, now here we are to start off today's video. We're going to be diving into the shorter time frames of Bitcoin and giving you guys an idea of what I think is going to be happening from here. Now you guys already know in my last video, we were all the way up here and looked like we were potentially going to be breaking out. And I continue to stick to my analysis that basically said that we're most likely not going to end up breaking out of the range highs from August at 25,000. We're probably going to end up starting a deeper correction back down. And from that point, the market has sold off. We weren't actually able to hold support above here. And now the market's looking even more weak. And if we come down here and look at it, it looks to me like we're consolidating within this channel, which is once again something that's going to happen when you're looking at corrective type of sequences. This to me looks like some rough example of an ABC correction. And once we actually break down from this, in my opinion, that's going to set us up for a much bigger drop all the way back down to the range lows that we were at right before we rallied upwards into the August highs, which price-wise is going to be about $21,500. And I think it's likely that that's the area that we're headed next. You know, after this point, once we come back down here, I do believe that we would actually source enough liquidity to have some type of a bounce. You know, we might see an ABC back all the way back up to retest some of these range highs that were set here over in our wave 3 high. So if you guys remember, based off of our Elliott wave count, this was wave 1, this was wave 3, this was 4, and then that was 5. So I would expect that we would bounce once we come back down here onto support of our wave 4 structure, because generally that's an area where there is a decent amount of liquidity. This does look like that would be the end to our short-term correction, and I would expect at least some type of a bounce. And that bounce could easily take us back into contact with the top of this wave 3 high. And so I do believe that this is going to be a pretty choppy period nonetheless, but I don't believe that after that move happens that this is going to be over by any stretch of the woods. What it looks like to me is we'd most likely be completing some type of A, B, and then I would still expect that we get a deeper C wave decline right down in here. That's just what makes the most sense to me based off of what the market structure is telling us. It looks like we're going to get 5 waves down.
Hey guys, what's going on? I launched one fifth full of me playing Minecraft on Twitch. Now that we have an XSplit broadcast on the all the way at the end after the quotes, we're going to type in space ENABLERE to look like after accomplishing that. I can't guarantee.
The question is, how deep is this wave C going to go? We know that based off of our Fibonacci that we would be expecting at least a move down to about the low 19,000s, $19,200 approximately. So really anywhere within this box is going to be a pretty good area to target. I would say originally the best place to start would probably be down here at the 0.5. It's not a bad idea to grab some bids down here, place some bids, and just simply look to accumulate, because oftentimes, you know, what we often do to ourselves is we get too overconfident thinking that we're going to nail the exact bottom or sell the exact top, when that's never what we actually end up doing. Very rarely are you going to be that guy that nails the exact top or nails the exact bottom. And what we should focus on doing is simply look to capture the majority of the move. Now that the market is starting to break down, it's starting to show more weakness. We've got rejected off of these wave 3 highs a couple different times now. To me, it's looking like we're getting ready to spill over to about $21,500. And after that move, you know, I do expect that we're going to get a little bit of momentum. And we talked about that in my last video. And if we come over here and actually take a look at Polkadot, in my opinion, this is a pretty good example. We're going to remove our resistance over here, and we're going to focus on the 618 support. But this is pretty much in that same boat, where we got 5 waves up, and we're expecting to see some type of corrective wave back down to the 618. Now, the thing with this is it looks like we're going to retest down here at about this 0.5 region, and then we'll probably end up getting a little bit of a relief bounce. And I do believe that that relief bounce will take us back up to the highs of wave 3. And after that point, we would still expect to see a larger wave C decline that would take us back down to the 618 fib. And so that's literally what I'm going to be watching over here with Bitcoin as well. The only problem with Bitcoin is it hasn't got that final drop to take us back down to the wave 4 support. And I do believe that once we actually break below this current support inside of this trend, inside of this channel that we're in right now, we're going to get a quick spill back down to that level. And so once that happens, you know, there's still plenty of people that are expecting more upside. There's still a lot of people that are looking at that. And so I do believe that we'll see a short-term relief bounce. You know, the relief bounce doesn't have to go all the way to the top of the wave 3 highs, but a bigger bounce nonetheless, at least back up into the prior consolidation of pretty much where we're at today, is what I would expect before getting that larger move to the downside. Overall, I think that we should be expecting the bottom of this corrective move to be taking us somewhere around the end of March to sometime into maybe even the end of April. It's hard to say exactly. We don't know the exact times that it's going to take, but I would say that around the end of March, sometime in April, will most likely end up being the bottom of that correction. And so this is what I'm watching from Bitcoin in the shorter time frames. If we remove some of these drawing tools in here, let's take a look at what is actually forming on a larger scale, which if we zoom out here, the way that I kind of think that the market structure is going to take is if we get to a bigger time frame, let's go to a weekly. Let's look at Bitcoin on the weekly, because one of the things that I was telling me that we're most likely at a topping point already is the fact when we come down here and look at our momentum indicators, the RSI, in my opinion, is not the greatest momentum indicator to use, although it is one of the most common. Everybody seems to use this, but for me, I find it much more relatable if I compare it with the OBV. The OBV gives better signals, it's a little bit more direct, and the RSI can actually stay overbought or oversold for long given periods of time. The only problem with the RSI is the fact that you're going to get mixed signals. Sometimes you can continue to see this market pull back and make lower lows and lower highs as the price is going up, and that was what we actually saw over here inside of our bull market for a long period of time. We actually saw, technically the RSI topped right here, and then we started to see this downtrend that was taking place, and that was all the way over here. So we saw multiple different highs, and it was giving us mixed signals throughout that period. So it's not the greatest indicator to use by itself, but when we compare it to the OBV, we get a lot stronger confirmation. And most recently, we saw a higher high in price, and yet none of the momentum indicators broke out. The RSI has made a double top basically, and the OBV has made a lower high. And so because the OBV is giving me a lower high and the RSI wasn't able to break out either, I do believe that this is going to end up getting exhausted and we're going to come down. And it makes sense that these indicators would be telling us this, because if we look at the price, we already had 5 waves up. Inside of wave 5, which is what you're going to see at the top of an Elliott wave cycle, it would make sense that that would also flash our momentum indicators telling us that the short-term trend is exhausted. So with that being said, I am expecting that we're going to come back down to this green level. And if we look at what that will actually end up forming on a bigger time frame, let's assume we get back down to this level. We might bounce a little bit. But overall, we're going to expect to come back down into contact with this green level around the 618. And if we're looking at this based off of a charting pattern principle, what it looks like to me is that we would have a pretty clean inverse head and shoulder formation that could be forming. And this is just the most accurate way that I see the market going. I mean, either way, no matter what the short term takes, I do believe that we're going to come back down and retest this green level. And if we come back down and retest this green level, it's going to set up in a type of way that looks just like a inverse head and shoulder, which is a reversal pattern. And if we're looking at this as a reversal pattern, the way that you would measure this out for targets is you take the top of the range, the shoulder, or I should say the neckline of the head and shoulder formation, and the more symmetrical that these line up, the more accurate the pattern. And because we're on a weekly time frame, because it's a bigger, more expansive pattern, that also gives it more validity, right? And so if that's what we're looking at, the way that you would measure a target is from the top of the neckline down to the bottom of the head, and then you would basically just move this to the top on the other side, and then that would be giving us a target of about $35,500, which if I come over here and draw a line, it'd be about right here. And so that next breakout that we would expect to see somewhere, around April, I would say, sometime in April is where I think that we'd end up bottoming. We would expect to see a pretty decent breakout. Once we could actually clear the neckline, then I think it's going to be a pretty quick impulse upwards of this region. And here's the thing, guys, because this first impulse down here was our first 1, 2, 3, 4, and 5 Elliott wave, that means that this entire first move is just a one wave, right? There's always 3 impulse waves for every wave. This was our first 3 set of impulse waves. That completed wave 1. We're working on the corrective cycle. we're working on the corrective sequence. That'll give us wave 2. And then what'll follow after is a wave 3 impulse, wave 4 correction, and then we still have a whole nother wave 5 to go. And so if we're looking at this based off of Elliott wave theory rules, what we'd be looking at here, if we were trying to measure out how high this wave 2, or how high the wave 3 should go, I should say, we'd be looking at almost exactly the same distance to the neckline, because we need to see inside of a wave 3 that it hits at least the 1618, because that would resemble that it's at least the same size as the last impulse. Wave 3s cannot be smaller than a wave 1, and so you have to go to at least the 1618. They can be the same size, but the wave 3 can't be smaller. And so it makes sense to me that the very beginning, that the threshold for our wave 3 would be hitting at the same exact target for our neckline of the inverse head and shoulder. So what that tells me is that we could actually overextend past the 618, because like I said, it stated, this is a wave 3. Wave 3s have to be at least the same size as wave 1. They cannot be smaller. So inside of a wave 3, oftentimes they are actually bigger than wave 1. Oftentimes they can be a little bit more overextended, because in a wave 3, that's generally where the most volume comes in. It's generally the most impulsive wave that exists based off of Elliott wave theory. And so, you know, we could literally see a move all the way upwards of, you know, somewhere in between the 2618 and the 1618, and this thing could all the way go up to the 2618 and make it double the size of wave 1, which is generally what we're going to see. I mean, if we got in here to the shorter time frames of just our most recent impulse, it makes a lot of sense, because you guys can actually be able to see those Elliott waves, you know, a little bit easier. See, this is a wave 1, it's a wave 2, and then this was a wave 3, right? So wave 3s are oftentimes a lot bigger, and then wave 5 is sometimes about the same size as wave 1, generally based off Elliott wave theory rules, although it can differ. And so if we're looking at this on a bigger time frame, this being our first impulse, this next impulse